European market open, everyone. A minute to go until the start of cash equity trading in Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Downing Street's hot seat. The UK's Liz Truss battles to rescue her premiership. The pound gains on expectations of more U-turns as new Chancellor Jeremy Hunt is set to make a fiscal statement at 11 a.m. London time. Taking a stand, China's President Xi backs COVID-0 at his party Congress and doubles down on policies at the centre of tensions with the US. Chinese stocks slide. Plus, the EU plans to temporarily overhaul the continent's gas market with a dynamic price cap. It's the latest effort to rein in soaring energy bills.
So, Tom, given all of that, if you look at the futures, it's definitely a cautious start to the week. So a lot of these futures are down between, well, 0.1% and 0.2%. The focus, of course, is on China, putting, I guess, extra concern out there. And we're also starting into earnings season.
Yeah, and the market verdict, importantly, of course, on the new Chancellor of the Exchequer, who was out on the airwaves over the weekend trying to reassure the markets. That was central to all of his comments that he gave over the weekend. And we're going to get that important statement from the new Chancellor, as we said, at around 11 a.m. before he addresses the Commons at 3:30 p.m. That is the expectation. So the market's opening in the green. Just about in Spain, you're seeing gains of 0.5%. The FTSE 100 up by just 3 points, again, as equity markets start to open on the back of what was happening. The losses of last week, the concerns, of course, about the volatility and the political unrest, essentially, and breakdown here in the UK. The CAC current over in France gaining 0.3%. Let's switch it on, because really the primary of the focus today is not the equity markets here in the UK. It is all about the gilts. The pound has gained, yes, but we want to see what happens in the bond markets as we lead up to that statement from the new UK Chancellor. The future stateside pointing to gains of 0.7%. Officials, Fed officials, continue to say that you may need to see further and more aggressive hikes. That was after, by the way, the University of Michigan survey in terms of sentiment around inflation came in higher than expected. We know that that is important for Jade Powell in terms of how he assesses the rate hike path going forward. The US 10-year currently at 3.96. That is a move lower by 5 basis points. So a bit of a bid for US Treasuries, the benchmark at least. Gains for the pound of 0.8%. And you did see a pickup on the back of the news that the Chancellor will be giving this statement, and some speculation around further U-turns, more U-turns to this mini budget. Currently trading 112 for the pound. Brent is at $92 a barrel. That is a gain of 0.9%. Let's look at gilts then on this important day in terms of that market reaction to, yes, another Chancellor of the Exchequer. We'll switch it over. Again, the BOE coming out of a statement as well a few minutes ago saying that they have, and confirming that they did indeed end those bond purchases on Friday, saying that the operations did inject greater stability into the financial system. The repo operations, of course, remain in terms of that access for some of those funds. So here's how things are playing out then across the gilt curve. A little bit of a mixed picture, as you can see, with the 30-year at 4.61. Now it's all shaping up. Okay, you had a few seconds where things had to rattle out, but basically you've got money going in to gilts. Yields are down quite pronounced. The 17 basis point move on the 30-year, the 10-year at 4.17. That's a 15 basis point move lower. The 5-year is 4.14, and the 2-year, of course, at the front end, 3.74. So you're looking at essentially a 15 to 17 basis point move lower as money moves into gilt. So some reassurance then, and that was reflected in the pound. We'll see, of course, if this holds up to and including that statement at 11 from the UK Chancellor. Francine.
Yeah, if we dig deeper into the sectors, there's not these massive swings. I'm seeing actually quite a lot of green, but again, they're not massive gains. They're getting between 0.3% and 1%. Auto parts, utilities gaining around 1%, then you have banks and energy stocks, and then if you look a bit of pressure, but again, it's not a huge move. It's just a little bit to the downside. I have chemicals, construction materials, and consumer goods, Tom.
Okay, now, new Chancellor Jeremy Hunt is due to make that statement then on Britain's fiscal plans at 11 this morning. It's, as, of course, Liz Truss, the Prime Minister, her position as PM is coming under increased pressure following a series of U-turns on a mini-budget that resulted in the sacking of her previous Chancellor and left her plans for the economy in tatters. For more, we're joined by Bloomberg's Lizzie Burden in Downing Street. Lizzie, we're seeing the market reaction then, a bit of a bid for gilt, some relief, of course, reflected in the pound as well. When it comes to the Trussonomics agenda, essentially dead, what are we expecting from the new Chancellor?
Well, Tom, it's absolutely no coincidence that the new Chancellor, has given us a heads up that he's going to be speaking today before the market open. And you can see that reflected in the gilt market already, the lift there now. We're expecting Jeremy Hunt to make even more U-turns on Trussonomics. It seems to be dead in the water at this point because she did say on Friday that she was going to U-turn on corporation tax. She sacked her Chancellor, Kwasi Kwarteng, hugely politically embarrassing, but it doesn't do much to balance the books economically. Bloomberg Economics says she needs to find another £24 billion worth of revenue raises and saving in terms of spending cuts. So we'll get more of that today. It looks like Trussonomics is rapidly being turned into Sunaconomics, and it leaves a wide open goal for Keir Starmer. It's leaving Tory MPs asking themselves, what's the point of having Liz Truss here at number 10? 3 have already come out publicly and called for her to go. More behind the scenes are asking themselves, should we roll the dice and take a new leader now or wait for near certain wipeout in 2024? They're going to have a close eye on the gilt market today, but as George Osborne, the former UK Chancellor, put it, she is the Pinot, Prime Minister in name only.
So, Lizzie, if Liz Truss can weather the markets, of course, as you're saying, her second test is really trying to deal with the mutiny within her Conservative Party. Where does this leave the BOE?
Well, we've just heard from the Bank of England this morning, confirming what we already knew, essentially, that their emergency intervention has now come to an end. But interestingly, what we're also seeing this morning is that BOE rate pricing is at its lowest since the mini-budget. 5.36% is now seen as the peak for the key rate in May. This, of course, after Andrew Bailey spoke over the weekend, underscoring his message that the bank now wants to refocus on inflation fighting, though he did say that he perhaps sees higher rates in November than were expected in August as a result of all these fiscal measures. Take a listen to what Bailey had to say in Washington.
We will not hesitate to raise interest rates to meet the inflation target. And as things stand today, my best guess is that inflationary pressures will require a stronger response than we perhaps thought in August.
So the governor there in Washington, but really it comes down to how much pension funds have done to fortify themselves in this period of BOE help, and we're going to have to see that today.
Lizzie Burden, outside Downing Street, thank you very much indeed. Just checking back on these gilts then. I think the Chancellor can claim a victory, at least at this stage. He has a lot of hard work to do, but the UK Chancellor, Jeremy Hunt, seeing now gilts down quite significantly across the curve. That's a 21 basis point move lower on the 2-year. It's a 23 basis point move lower on the 30-year. Let's bring in now Bloomberg's Christine Aquino, but also Karen Chedid, who is the head of investment strategy at iShares EMEA at BlackRock. Christine, we'll start with you, and then Cameron will bring you in. Christine, the market reaction then, this is good news as far as the new UK Chancellor is concerned, particularly after the BOE came out and confirmed that, in fact, it had ended those operations on Friday.
Yes, Tom, I think what we can sum it up, what we're seeing this morning as essentially markets shedding a bit of that Trussonomics premium that we really have seen just and captured the markets for the last few weeks. And so it's good news to that extent, of course. But again, you know, we're waiting to hear from the new Chancellor, Jeremy Hunt. We'll see what the details are of his new fiscal plan and whether that does, in fact, bring us away from that Trustonomics idea of tax cuts and government spending and bring it back to something more market friendly. And we'll see if that premium will continue to be shed. Of course, the question is, you know, does this kind of just bring us back to square one in a lot of ways where, yes, UK markets are kind of shedding that premium, but they're still looking at a very difficult fourth quarter, talking about, again, a cost of living crisis and how consumers will weather that. And again, the potential of more BOE rate hikes potentially followed by just a U-turn in terms of rate cuts because the economy will be very, very challenged after that.
So, Kareem, I guess the million-dollar question, who's really in charge here? Is there still a Truss discount because her instinct was to deliver that mini-budget, or does the market just listen to the new chancellor?
Yeah, I mean, I think when we look at the macro environment now in the UK, we still have quite a bit of uncertainty around the politics. But when it comes down to it, to the gilts market, and the response to the changing economic policy, we have a situation where the gilt curve has gone from inverted to back to positive when you look at the two stands in a very quick space of time. So the term premium that investors are demanding, you know, moving away from the risk premium attached to Trustonomics or what exact UK political risk and policy risk we're talking about, the term premium that investors are demanding to own longer-term UK government bonds is coming back. And this comes back to this idea that fiscal credibility and long-term fiscal sustainability is in question, and investors demand more to own that.
So what do you need to hear from the Chancellor today in his statement to reduce some of that risk premium and to build out credibility once again?
I think we are seeing, you know, already signs of some U-turns around tax and around government spending. Those will probably have some impact on how much investors are demanding in terms of risk premium to own those longer-term bonds. But then when you bring it back to the BOE policy, of course, there is still some interest rate risk. You know, we're hearing from the Chancellor today, but then we also have the UK CPI on Thursday, and that is persistently high, you know, expected to come in at that 9.9%, you know, just shy of the double-digit figures. So the BOE rate hike risk is very much still on the table.
But Kareem, at the same time, every time you see a relatively sharp interest rate rise, then you have to look at the places in the markets which is leverage that are fine at 1%, not so fine at 5%. And this is partly what happened in the pensions market. Are there any other pockets in the markets in the UK that we should really worry about?
I mean, of course, the housing market, we do have a lot of fixed-rate mortgages that are rolling off to floating in 2023. A lot of analysts have been pointing to the spring 2023 point especially because it would intersect with the peak terminal rate of the BOE. So I think, of course, the mortgage market is something that's worth monitoring. But ultimately, that policy path from the BOE is still going to remain hawkish, and we heard that from Governor Bailey in Washington just earlier, and it's going to remain hawkish so long as the persistent inflationary pressures, especially at the core level, remain.
Yeah. From the BOE to the Fed then, Christine, I'll bring you in at this point, particularly on the back of that University of Michigan survey around inflation expectations over 1 year, and it coming in higher than expected. And we know Jay Powell's made a point of saying he watches that survey very closely indeed. How does that change the view from the markets in terms of rate pricing around the Fed?
Well, Tom, you know, I think last week's figures, the University of Michigan figure, yes, but also the U.S. CPI figure, which came in higher than expected. I think that drives home the point that the Fed itself has a lot more to do when it comes to tackling inflation. It was very interesting to see earlier in the week when there was a little bit of a nuanced change in the way the Fed was communicating around this. I mean, it seemed like they were starting to recognize the global impact of their policy and kind of being mindful of that, especially in the minutes of the September meeting. But then when the data came out, I think that kind of shifted the conversation back again to the Fed's primary focus, which is getting inflation down in the U.S., regardless of what potential risks that may pose to the rest of the global economy. And so I think that's where we are at the moment, which again leaves the rest of the world either scrambling to catch up with the Fed or having to deal with the painful consequences of a stronger dollar and global economy that would be struggling as a result of that.
Christine, thank you so much. Bloomberg's Christina Kino, Karim Shadid, Head of Investment Strategy for iShares, MEA and BlackRock, stays with us. Coming up, Defiant Xi, China's president, declares that the nation's global power has increased while warning of dangerous storms ahead at the Party Congress. That's moving markets, so we're live from Beijing next. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. Welcome back to the Open. We are 16 minutes into the European trading day. You are seeing across the European benchmark, currently just very modest gains of 0.2%. But more importantly, you are seeing moves, money moving into gilts, at least for now. Yields down around 20 basis points at the front end, 25 basis points towards the long end, as we continue to see the unpicking of Trussonomics from the new Chancellor, who'll be giving a statement at 11 a.m. The pound is also bid. Let's get back to what's happening in China, though. President Xi Jinping delivered a defiant message to the world in a speech at the Communist Party Congress that China is ready to stand its ground. She also signaled no change in direction for two main risk factors dragging the economy down: strict COVID rules and housing market policies. Let's bring in then Bloomberg's China government reporter Colin Murphy, who is in Beijing for us and was in the Great Hall of the People for this speech. Colin, in terms of the main takeaways then, what really kind of stood out to you?
Well, there was a whole host of different topics. So it was like from COVID to common prosperity to building up the military, Taiwan, so on and so forth. But I do think, you know, in the immediate sort of time frame, people were really curious as to what he would say about COVID, because that seems to be the most immediate barrier to the economic development here right now. And, you know, he defended it. It's his signature policy. And he said it was good for China and that it had helped protect people and the economy. And he avoided giving any timeline around changes to that strategy, which of course is becoming increasingly unpopular as people are more and more frustrated with it in terms of how it's impacting their daily lives, but also the economy.
So, Colin, what's on the cards for the next couple of days? I mean, there's quite a lot in the speech, and on geopolitics that makes the markets a little bit wary today.
Right, there was quite a lot, as you said, and this will take the implications of which will take a while to sort of work through. But I think for this particular week, we will see the delegates meeting mainly behind closed doors, reviewing the report, reviewing topics such as corruption, and they will re-emerge next week with a vote on the report and a short speech by Xi. But as you mentioned, the Taiwan issue particularly is quite of note. With Xi saying that it's a Chinese issue, and which is definitely a pushback against the U.S. And that sort of brings in the question, where are we headed in terms of U.S.-China relations? Will there be a Xi-Biden meeting, and how will that go? What should the expectations be for that? And that would be, of course, coming up next month. So yeah, there's a lot to reflect on, a lot to work through, and it will take some time before the actual implications of the amount of the long speech yesterday will begin to take shape.
Thank you so much, Colin Murphy, there, Bloomberg's China government reporter. And of course, our resident expert in China is also our Tom McKenzie, who you've been many, many years in China. And one of the things that's, not surprising, but I guess that the markets are now reacting because one of the greatest unknown is actually what happens in China economically and politically.
Yeah, absolutely. And particularly on COVID-0, you had this drumbeat of statements within the state media saying this is a system, this is a policy that works, and we're not backing down from that. And you heard that reiterated from Xi Jinping. Karim, I want to bring you in at this point for your views. Does any of this change BlackRock's views on the investability of China?
Not really. I mean, when we look at China, I think we need to break it up into the tactical horizon and the strategic. On the tactical horizon, you're absolutely right. It's all about the zero COVID policy and any signs of easing as the Congress finishes. And we didn't get a lot of signs of that. And so I think this will be really important for activity data. We have a lot of activity data coming out this week, from industrial production to retail sales to GDP, which will give us a sense of how much the zero COVID strategy to date has been impacting and whether there's been any signs of easing up in the impact on activity. And that will be key for the tactical view on China.
But what does that mean, in terms of regulation? So we're expecting them to inject, for example, things to encourage listed companies, for example, to buy back shares. Mm-hmm. Does this support the world economy at the margins because you see a boost in China, or is it really just domestic policy?
I would say it's more domestic. Actually, this has been one of the big factors when looking at the global economy and also some of the downgrades that we've seen from the IMF on the global economic growth forecasts, which is basically that this time, China is not the source of growth that usually shores up the global economy when you have shocks in other parts of the world. This time around, we're not seeing that pull through, which is creating more risks for the global economy as we head into 2023.
I want to quickly get your views on earnings, which is another big topic for us this week. We had some of the bank earnings coming through on Friday, JP Morgan, Citi, Morgan Stanley. You think that earnings peaked in the second quarter? You hold that view. What are you seeing? What are you looking for? And where are you seeing margins being maintained?
Yeah, I mean, we do see them as having peaked. And also, when I look at the earning analyst estimates, they're still too high. They've come down. They've come down more in the US than they have in Europe, interestingly, which means that even though Europe is cheaper in terms of how much it's underperformed, you could still see more pain in Europe as the analyst estimates get surprised on the downside more. Whereas even in the US, earnings are still too positive. So they've peaked, and the analysts have not reflected that they have peaked. In terms of where to see some signs of strength, I mean, I would look at it on a sector level, and I would focus on those pockets of the stock market where we have a bit more resilience to this margin pressure theme. So I'd stay away from the consumers, even the consumer staples, which are traditionally defensive. Even those are finding it more difficult to pass the cost to consumer or to shore it up. So I would stick with the healthcare and other types of defensives.
Karim, thank you so much. Karim Shedid, their head of investment strategy for iShares EMEA at BlackRock. Now, later, we'll be also hearing from Jim O'Neill on the turmoil engulfing the UK. You don't want to miss that conversation. It's at 9 o'clock. This is Bloomberg.
a digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
Oh, look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Welcome back to the Open, everyone. We are 25 minutes into the European trading day, and this is the picture across the board. Now, the focus is really on the markets. So first of all, worrying about the UK, worrying about global inflation, still digesting and trying to figure out what's happening with the Fed over in the US. And then the other unknown is, of course, what's happening in China. That's putting a little bit of, I guess, markets on tenterhooks. You can see the CAC 40 down 0.2%. The FTSE is pretty much flat. The big one that Tom was talking about is that UK 30-year yield 4.511. Let's get straight to the Bloomberg Business Flash. Here's Alice Atkins. Hi, Alice.
Hi, Francine. We've heard details of a revamp at Goldman Sachs. According to the Wall Street Journal, the bank plans to combine its flagship investment banking and trading businesses into one unit. It also plans to merge its asset and wealth management divisions. The reporter says the reorganization could be announced within days. Rupert Murdoch wants to combine News Corp and Fox, recreating the media giant he split apart 9 years ago. The move would likely consolidate power in the hands of his son, Lachlan, currently the CEO of Fox. So far, none of the Murdoch clan have spoken publicly about the deal, but the companies acknowledge it was in the works on Friday. That's your Bloomberg Business Flash. Tom, Francine.
Alice, thanks so much. Alice Atkins in London. Now, coming up, the Bank of England ends its emergency bond buying program. A look at how UK assets are faring amid the turmoil. That's coming up next. This is Bloomberg.
My grandfather got into the mutual fund business because the average investor could not get a diversified stock portfolio, and it was too dangerous to put your entire savings in just a couple of companies. So the mutual fund was created to give a diversified expert management at a reasonable price. Today, we have a phenomenon where companies are waiting much longer to go public. And so in 2000, the average company went public after 3 years. Now, companies are waiting 9 to 10 years because there's so much money available in the private markets. As a matter of fact, they're half the number of public companies that there were in 2000, and there's 5 times the number of private equity-backed companies. So just from an investable universe, you look at the private markets, and it's significantly bigger. So the question is, that return that used to be captured in the public markets is now captured in the private markets. But the problem, as you know, is you're really tied up for a long time when you invest in a private equity fund. And so trying to figure out a way to solve the same problem my grandfather was trying to solve, which is how do you bring those returns responsibly, the democratization of the private markets to the retail investors. And I describe it as a bit of like running with scissors. Scissors is a great tool if you use it appropriately. And so we're focused on trying to figure out responsibly bringing it in to the average investor.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Downing Street hot seat UK bonds surge at the Open on expectations of more U-turns by the government. Now, the new Chancellor, Jeremy Hunt, is set to make a fiscal statement at 11 a.m. London time. Taking a stand, China's President Xi backs COVID-0 at his party congress and doubles down on policies at the center of tensions with the U.S. Chinese stocks slide. Plus, the EU plans to temporarily overhaul the continent's gas market with the dynamic price cap, its latest effort to rein in soaring energy bills. So, Tom, if you look at the markets, they're kind of trading sideways, but actually quite a lot going on in the UK. UK bonds are surging. Corporate bonds seem to be really mirroring what we're seeing in gilts.
And we know that that corporate stress has been there and it's been very, very acute indeed. So any relief will be welcome, certainly for the corporate space. It is earnings season as well, so we continue to watch the numbers that come through. But absolutely, the focus is on the UK gilt markets this morning after what was an attempted charm offensive by the new Chancellor over the weekend with the media and, of course, his message to the markets around stability and getting the fiscal house back in order. More unpicking of Trussonomics is expected. That statement out at 11 a.m. will be, of course, zeroed in on by not just politicians and political watchers, but also, of course, the markets. You're seeing gains across the benchmark of 0.1% over the DAX, essentially unchanged in Germany. And here in the UK, the FTSE 100 adding 12 points, up 0.2%. Let's switch it over, have a look at the sectors as we continue to keep in mind that really it's what's happening in the gilt markets this morning when it comes to the UK that is the most important. You have seen that move of money into gilts, yields off by around 20 basis points the last time I checked. So let's have a look at the sectors then. Again, I talked about the earnings season. Stateside on Friday, you had JP Morgan and Citi coming through with better than expected results. Morgan Stanley, a bit of a disappointment. And then Goldman Sachs, the interest around the restructuring that is emerging there within that investment bank as well. Utilities at the top of the list, followed by energy and telecom. So a bit of a safe haven tilt in terms of the way that money flowing into these equities and these sectors this morning. At the bottom of the list, consumer products down 0.9%. Technology also lower by 0.7. Worth noting, the NASDAQ fell and closed lower by more than 3%. The S&P lower by about 2.5% on Friday. The University of Michigan survey just reconfirming that inflation is persistent and the Fed is going to have to do more to get that under control. But let's go from the Fed to the Bank of England, and the central bank here has confirmed it will terminate its emergency bond buying program. That, as the new Chancellor, Jeremy Hunt, is due to make a statement on Britain's fiscal plans at 11 this morning. For more, we are joined by Bloomberg's Lizzie Burden. Lizzie, break down then the BOE statement that we had out. They confirmed that they did indeed wrap up that bond buying on Friday.
They did, but this is a statement that's intended to calm markets. While they have wrapped up bond buying, they're also saying that there are various other repo facilities available if needed. And so the broader message is that the Bank of England now wants to refocus on fighting inflation, but it's there if necessary. This was the message that Andrew Bailey was trying to hammer home at the IMF over the weekend. He did actually say that he expects a bigger rate rise is going to be needed in November than was expected in August as a result of Liz Truss's fiscal policy. But interestingly, looking at BOE market pricing this morning, it's actually at its lowest since the mini budget. And now the key rates peak in May is expected at 5.36%. So a calming in markets has changed the course a little bit for the BOE, it seems.
So it also seems that, Lizzie, and I could watch actually you all day in front of Downing Street, you see people coming in and out, you wonder what they must be thinking and saying. And I know you've also spotted Larry the cat last Friday. So if the Chancellor is in charge, and if it's basically Jeremy Hunt that calls the shots now, what are we expecting him to say?
Well, we're expecting lots more reversals on Trussonomics as Jeremy Hunt turns Trussonomics into Sunakonomics and calms the markets. Finally, we have a good communicator in number 11 Downing Street. He hinted at his message over the weekend and then this morning pre-announced that we're going to hear from him at 11 o'clock and 3:30 today. And then, as a result, you've seen gilts rallying, so no coincidence there. But what we're expecting in terms of the reversals, a confirmation that this cut in income tax will be delayed. We were expecting reversals on the cuts in stamp duty, the tax in dividends, tax-free shopping for overseas visitors. So dismantling Kwasi Kwarteng's plans one by one. But the irony is that these were also Liz Truss's plans. So it seems that Trussonomics is dead in the water, which begs the question, what is the point of having her here at number 10 Downing Street? Tory MPs are asking themselves. 3 publicly have called on her to go. Behind the scenes, more are asking whether she's got days, weeks or months left. Kwasi Kwarteng actually has said that it's only a week.
All right, Lizzie, thank you so much. Lizzie Burden there outside number 10. Now, Goldman Sachs plans to combine its flagship investment banking and trading businesses into a unit as part of the organization, a reorganization. That's according to the Wall Street Journal. Now, this makes David Solomon's third major restructure in just 4 years as chief executive. Now, joining us with more is Tom Metcalf, who leads our finance team here in London. So, first of all, Tom, good morning. How dramatic is this? And does it mean that the last reorganization didn't work, or is it just improving on what he's already built?
Yeah, I think it's probably the former. So for me, the thing that jumps out here is the optics. This is the third sort of reorg in 4 years. That is not a good look for any CEO. And it's a lot of these sort of flagship programs that, were launched, a lot of fanfare. Hey, this is going to be the way we sort of move Goldman Sachs to the future. And guess what? They're sort of rolling them back, but also at the same time kind of restructuring the firm.
Tom, you're very diplomatic, but you kind of nod to this. So, what does it mean for the credibility of David Solomon? What does it mean for his standing within the bank and within the banking world, and for his strategy?
Yeah, I think it's bad news for all of them, right? You never want to sort of completely reverse course, as we can see in the UK, right? But, I think particularly sort of embarrassing almost is this move back from Marcus. So that was launched. He kind of staked his name on it, said this is the way we're going to get regular recurring revenue. And guess what? They're now basically breaking that up in terms of splitting out among various banks. It's now definitely not a sort of top priority.
So will we have a clue in third quarter earnings on whether this is because they didn't do as well as expected?
Yeah, I suspect you're going to see some losses, right? That's normally what's going to be pushing something like that through. So the earnings come out tomorrow. I think this was all meant to be announced then. So, they've been kind of hurried into these sort of revelations. And it'll be interesting to see how he characterizes it, David Solomon.
Okay, so the added interest around the earnings. Tom, what else are you looking for? And what have you learned from the earnings? They came through from JP Morgan Citi. Morgan Stanley, a bit of a disappointment there. Where do things stand in terms of the banking earnings up until this point?
Yeah, I think, when we're looking at Goldman, we're going to obviously look at their trading arm. I think it's pretty obvious the investment banking side is going to struggle like all the other banks. And it's just a question, how much can the traders sort of cover those kind of shortfalls? So I think, for a few of the banks, you did see that happen. But yeah, someone like Morgan Stanley was a bit disappointing for the markets.
Okay, Bloomberg's Tom Metcalf on the travails over at Goldman, another restructuring. Looking ahead to those earnings, there will be added interest really tomorrow around Goldman Sachs. Tom Metcalf, thank you as ever. Francine.
Now, coming up, the Paris Motor Show is back. We'll be hearing from the Stellantis chief executive, Carlos Tavares. He's coming up next with our Caroline Conan. This is Bloomberg.
There is an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
So hate and love together.
Now I would have a much more experience about those who says I love you and then betrayed you.
The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci's really teetering on the brink at this stage.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back to the Open. 40 minutes into European trading day. I can tell you about European stocks. They are currently flat. The interest, though, really lies in what's happening in the gilt markets here in the UK, and you are seeing yields lower quite significantly. These are bid now, and this is going to offer some relief, some respite, at least temporarily, for the new Chancellor of the Exchequer, Jeremy Hunt, ahead of that statement at 11 a.m. UK time. So at the front end, that is a 23 basis point move lower, 368. The 30-year, which was getting close to that 5% level again towards the end of last week. It's currently at 4.5 on the 30-year. That is a move lower by 27 basis points. The pound also up 0.8%, and the futures in the US pointing to gains of between 0.8 and 0.9%. Let's get the Bloomberg First Word News now with Alice Atkins. Alice.
Hi, Tom. In the UK, the pound is gaining this morning. That's on expectations there may be further U-turns over the government's unfunded tax cuts. The newly appointed Chancellor, Jeremy Hunt, told the BBC that nothing is off the table.
I'm not taking anything off the table. I want to keep as many of those tax cuts as I possibly can because our long-term health depends on being a low-tax economy, and I very strongly believe that.
Goldman Sachs is downgrading its outlook for growth in the UK. That's after Prime Minister Liz Truss replaced her Chancellor and rode back on cancelling an increase in corporation tax. The bank says it now expects a more significant recession. Annual growth for 2023 is now -1%, down from -0.4%. Chinese President Xi Jinping says China is staying the course as it faces what he calls dangerous storms and growing challenges from the US. In an almost 2-hour speech to open the 5-yearly Communist Party Congress, Xi said China would pursue development while ensuring national security. He also said Taiwan reunification was a matter for the Chinese and hailed what he called the restoration of order in Hong Kong. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom, Francine.
Alice, thank you so much. Alice Atkins in London. Now, the Mercedes-Benz chief executive says the energy crisis may be a challenge in Europe for the next 2 to 3 years, but this could also be a catalyst to accelerate the transition into renewables. Now, Mercedes won't have a stand at the Paris Car Show, but has unveiled a new electric SUV. And the chief executive, Ola Kalanios, spoke with Bloomberg's Caroline Conan.
The last few years has been a challenging business environment with COVID, with supply restrictions, and of course also the war in Ukraine that drives energy prices. If you couple that with interest rates, you know, the economy might cool down, but we've always had these cycles and we have gone through the cycles. If you have a resilient brand like Mercedes-Benz with a very loyal customer base, I think we're going to be prepared for whatever may come.
Your third quarter sales were quite strong. Do you expect some kind of moderation in the fourth quarter?
We grew by 21% in the third quarter, so we're very happy about that, very robust. And we're also looking at finishing this year off in a robust fashion.
But do the Chinese car makers, especially those making EVs, pose a threat to you?
China is the biggest car market in the world, so naturally you will have international brands in China like us. It's our biggest and most successful market in the last 10 years. But isn't it naturally in competition that maybe some of those brands are going to try to seek their luck in the European market as well? I think that's all fine.
Another challenge, of course, of the car industry has been the supply chain challenge. What car parts are you missing at the moment?
Primarily for the last couple of years or even more, we have been looking at shortages of semiconductors, different kinds of semiconductors. And the chip makers and also the wafer fabs are increasing their production capacities. But that takes time. There's a lead time to build up that. So I think this supply chain constraint will certainly be with us throughout this year and also into next year. And then hopefully as we go through next year, step by step, we will see a better situation.
With the energy crisis, some also worry that it may have an impact on steel makers. Are you worried you might be missing steel at some point?
I think we have to divide this into maybe two phases. Yes, Europe in particular will be challenged in the next 2, maybe 3 years. And we're working on fixing that, especially Germany that's been dependent on gas coming from Russia. So there's a lot of activity to deal with this short to mid-term challenge. But if we go and look a little bit longer, mid to long term, I think this may even be a catalyst to go quicker into renewables. In fact, we have made 2 very big decisions only in the last couple of months. We're going to build a sizable wind park on one of our premises in north of Germany, and also signed up just recently with an energy company here in Europe, a massive wind park in the Baltic Sea. Those 2 projects alone in the mid to long term will cover 40% of our electricity needs. So you can see now that companies are making decisions to create resilience in the mid to long term.
Okay, the Mercedes CEO speaking to our Caroline Conan, who joins us now with another fantastic interview, the CEO of Stellantis. Caroline.
Tom, we haven't had a Paris car show in 4 years. The last one was in 2018. And I'm now with the Stellantis CEO, Carlos Tavares, in front of a Jeep Avenger, fully electric. Stellantis wants to be one of the leaders of electrification in Europe. My first question to you would be, how are you planning to do that, given the very fierce competition?
Well, look at the numbers. Look at the numbers. Here in France, the number 1 EV sales is the Peugeot 208 electric. Look at the fantastic Jeep Avenger, the first pure EV Jeep that we introduced in Europe. And we are fighting for the number 1 spot in terms of pure EV sales in Europe. And with our PHEV plus the BEV in this country, we are by far the leaders. So look at the numbers.
A lot of brands are actually not coming to this Paris air show, to this Paris car show. Volkswagen is not here, BMW is not here. However, a lot of Chinese EV makers, including BYD and Great Wall, to open this kind of highway at the Paris car show. Chinese EV makers to open this kind of highway to Chinese EV makers.
Perhaps it is, but I would say it's marginal if you compare to the framing that was offered by the European Union to the Chinese competition. If you look at what has been set in terms of open markets, regulations that support what has been done in the Chinese market for the last 10 or 15 years, the risk is there. The fact that we are here or not, we are here, we Stellantis are at the Paris Motor Show. Some of my competitors decided not to come, as I did. I didn't go to the Munich Motor Show a few months ago. That's a pure return on investment decision. But the big gorilla, the big fact is that European Union has opened the market to the Chinese competitors in a way that indeed we can challenge.
One of the big challenges, of course, of the car industry has been the supply chain challenge, including chips. Are you ready to pay more for chips so they don't go to competitors like Tesla?
Well, actually, you are already paying more for the chips. All the industry is paying more for the chips because, as you know, the real competitor of the automotive industry, when you look for chips, is the consumer electronic industry. So the automotive industry is already paying more for the chips. And of course, that's bad news for the consumer, because at the end of the day, when we protect the sustainability of our companies, that additional cost ends up in the price of the cars. So it's bad news for the consumers. But yes, the answer is yes, because we are competing with the consumer electronics industry.
Apart from chips, what car parts are you missing at the moment? Are you worried, for example, that the energy crisis that's putting a lot of pressure on steel makers will actually make it hard to find steel in the future?
I would say that the situation is uneven. On the chips and the semiconductor front, things are improving progressively, slowly but progressively, and I can guesstimate that by the end of 2023, that situation will be vanished and that will be a balance between the demand and the manufacturing needs. So that situation is improving. On the steel front, I think that the steel makers are doing whatever they can to keep the pressure on the market so that they limit the capacity so that prices remain quite high. But as we know, we see that the economic slowdown is now bringing the demand down. And as the demand is going to go down, the price of steel will have to go down and is already giving signs that it goes down. So that is not now the major factor. What now is visible is the logistics. The logistics in Europe and namely the road logistics are a big problem in this region of the world. And this is now the bottleneck of the industry, is the speed at which you bring the cars to the consumers and to the dealerships. That's where the bottleneck is right now.
Finally, the energy crisis is also, of course, having an impact on consumers. The ASEA Association is still expecting the car market to shrink compared to pre-COVID levels. Do you think the cost of living crisis, the energy crisis, is having an impact? How long do you think this is going to last for European car customers?
That's the key question you are raising. I believe that the European Union and the political leaders should recognize that for a modern democracy, freedom of mobility is a pillar of modern democracies. And that means that we need to protect the affordability for the middle classes to access clean, safe automobiles. This is fundamental. And of course, the energy inflation is not helping the access to the automobile and the freedom of mobility of the middle classes. That needs to be handled. But it also assumes that the European Union will be able to move beyond dogmatism. And many decisions that have been made over the last few years are purely dogmatic, and now it's time to start being pragmatic. So what I would recommend to the European political leaders is that they add a layer of pragmatism to the dogmatism that led to the decisions they have made. The decisions they have made led to the situation we know today, and please recognize that we have been explaining for the last 5 years that this would be the consequence of the decision. So the industry has been anticipating on those consequences.
How long will the energy crisis impact the European consumer? This is the key question, according to the Stellantis CEO, Carlos Tavares. Back to you in London.
Kathleen, great stuff. Thank you very much indeed with the Stellantis CEO there at the Auto Show. Coming up, Jim O'Neill, former chairman of Goldman Sachs Asset Management, of course, and former UK government minister, joining at the top of the hour. Do not miss that conversation. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Welcome back to the Open, everyone. 55 minutes into the European trading day. We are obsessed with UK yields. This is what Tom will talk about in a second, but investors in general are pretty defined this Monday morning, gaining some 0.5%, but of course we're looking at Chinese President Xi's speech and trying to look ahead to earnings as well.
Yes, indeed, and we'll get to those gilts, as you flagged, because we heard from the new Chancellor over the weekend really trying to send a message to the markets. We know he's going to be coming out with a statement at 11 a.m. UK, and so far, 55 minutes into the trading session, these gains for gilts have held. Look at the back end, the 30-year, 447, and don't forget it was near 480 towards the end of last week. 447 now, that's a move lower by 31 basis points on the 30-year. The 2-year at the front end, 365, that's a move lower by 26 basis points. The pound also bid. Will, of course, this be sustained as Trussonomics is unpicked and the power shift from Truss, arguably, all the way to the Chancellor. He is the man now with the power, arguably, Francine.
Yeah, he certainly is. That's it for the European Market Open. Surveillance Early Edition is up next. So we'll talk UK. We'll talk with Jim O'Neill. We'll also look at, of course, what we heard from China, and then a look ahead to earnings. Remember, on Wednesday, we have UK inflation figures, although it's unlikely to change much of what we're expecting the Bank of England to do going forward. This is Bloomberg.
There's more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
When U.S. inflation numbers are released,
The score is inflation won, Fed nothing today.
Bloomberg brings you crucial data at terminal speed.
Core CPI in America, 40-year high.
Yields are absolutely flying.
Equities down and down hard.
It's ugly.
And instant expert analysis.
What is the makeup of this inflation?
We are watching the underlying fundamentals.
Will they go 100 basis points?
The downshift just keeps getting pushed out. Now it looks like we're going into extra innings.
Nobody covers the economy like Bloomberg, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. Downing Street, hot seat. UK bonds surge at the open on expectations of more U-turns by the government. The new Chancellor, Jeremy Hunt, is set to make a fiscal statement at 11 a.m. London time. Taking a stand, China's President Xi backs COVID-0 at his party Congress. He doubles down on policies at the center of tensions with the U.S. and Chinese stocks slide. Plus, the EU plans to temporarily overhaul the continent's gas market with a dynamic price cap, its latest effort to rein in soaring energy bills. Now, first thing is first, so let's check in on the markets. Maybe we start with UK gilts. Certainly a lot of pressure on what's going on in the UK. That 30-year yield, 4.45. Now, the pound did rally, UK bonds overall surging, again, amid expectations that more of Prime Minister's package of unfunded tax may actually be reversed. If you look at U.S. futures, they're pretty much higher, and then overall, European stocks gaining some 0.5% as, of course, we watch what's going on with earnings. A bit of subdued liquidity, or at least, subdued activity because of what we heard from inflation in the U.S., and then the big data point in the UK is Wednesday with that inflation report. Okay, that's a new chancellor. I think we also had a map of Europe, but if we don't, it doesn't matter, because the UK's fourth Chancellor of the Exchequer in as many months has spoken to the media following his appointment on Friday in the wake of Kwasi Kwarteng's sacking. Well, here's what Jeremy Hunt told the BBC.
I'm not taking anything off the table. I want to keep as many of those tax cuts as I possibly can, because our long-term health depends on being a low-tax economy, and I very strongly believe that.
Now, for more on all of this, we're joined by Bloomberg's Lizzie Burden in Downing Street. So, Lizzie, this could be the start of a pretty torrid week on the markets once again for the UK.
Well, Francine, we're expecting a huge reversal of Truss's fiscal policy, essentially Trussonomics turning into Sunakonomics. We're expecting confirmation of the delay to the income tax cut. We're expecting a reversal of Kwarteng's stamp duty cuts, the tax on dividends, the tax-free shopping for overseas visitors. Really, it's a dismantling of Kwarteng's policy, which was Truss's policy, which begs the question, what is the point of having her at number 10? It's a question Tory MPs are asking themselves. 3 have already said publicly that she should go. Behind the scenes, they're asking themselves, should they roll the dice on a new leader now, or should they wait for what seems like inevitable annihilation in 2024? But given that Jeremy Hunt really seems to be the one in charge now, perhaps Liz Truss has inadvertently hired her successor.
Okay, Lizzie, thank you so much. Lizzie Burden there outside number 10. Now, we're also joined by Lord Jim O'Neill. He's a leading economist and creator of the acronym BRICS. He's former chairman of Goldman Sachs Asset Management, former Chatham House, and former UK government minister. Jim, as always, thank you so much for joining us. I mean, last week was crazy in UK markets. Are you expecting more stability this week, or is it all still to play?
I don't think it'll be stable, but quite how it starts to pan out will now obviously completely depend on both what the new Chancellor says at 11 o'clock UK time this morning, And then, importantly, in addition to how he repeats that, how what he says is taken in the House later today, because amongst the many big issues is the instability and variability of the backbench Tory MPs and all the various factions. So
if Liz Truss
it's not going to be stable. We'll either have a further rally or it'll all fall apart and we'll collapse again.
So which one do you think it is, Jim? If she, you know, the Prime Minister has a lot to do this week. She's kind of countering the markets once again. And then, as you say, maybe face a rebellion within the Tory party. Does she stay on as Prime Minister?
I mean, it's not a cop-out, but I honestly have no idea. My instinct is that the system will try, the Tory system will try and have her stay on, because the route to a new leader itself is so now fraught. I cannot believe how they could go through the supposed normal process of a 2 to 3 month plan of electing a new election from, at the end of the day, what is basically 150,000 people. And I can't imagine many Tory MPs would want to have an immediate general election, given the opinion polls. So if you rule out both of those options, the only other one is a so-called coronation. And because there are so many factions inside the Tory party, I can't see the candidate that would be likely to be anointed by so many. So as bizarre and as crazy as it is, but as your colleague Lizzie just described, I mean, effectively, the PM trots on as some kind of version of a chair, not a particularly strong one, and the Chancellor's now the CEO. But all of that could unravel if he himself now has made the error of raising expectations and can't deliver. And the biggest problem of them all is you have a party that, you know, is obviously ideologically committed to lower taxes, but you have a country that does not want significant spending cuts. And if you can't marry those two, how can you have fiscal credibility? And he's said all the right things. I've been really impressed with what Jeremy's said over the weekend, but how can you marry those three things together without really, really tough decisions that are going to upset a significant number of people?
So what's the plan you imagine coming out from the Chancellor today?
I mean, I don't think he will be able to really detail any spending cuts because, of course, linked to aspects of what I've said with the factions, he can't just impose those on all the different departments, or many of those cabinet ministers themselves will be part of a revolt against him. So he can only give a flavour of what he'd like to do on spending cuts, and then as far as I know, he will spend the week sitting down with all of them, trying to persuade them to, from what I can see over the weekend, virtually every department's going to have some kind of cuts. So therefore, what he will do today is tell us now what the markets have effectively priced in, and what, again, Lizzie talked about. They're going to reverse all the tax moves bar the national insurance cut. But we kind of know that now. The tricky bit is, unless they're actually going to raise income tax or bring in some other higher taxes, which he could do, and some part of me thinks, at least from a policy ideal, that would be what they should do. I think he won't go that far this quickly because he'll want to explore the limits of spending cuts.
Yeah. So what do you think international investors, Jim, are thinking right now? Is the UK still investable, maybe more investable than a week ago? Or the jury's still out?
I think the jury's still out because we don't know how strong a card the new Chancellor's being given. It looks, from how he's behaved over the weekend, that he feels as though he's got a really strong card. But when it comes to trying to push through spending cuts, he's got two problems. I've talked about one. He's got problems with each department and Secretary of State. But you're then going to open up all the issues around, let's call it the left wing of the Tory party, with One Nation Tory, as they call themselves, and others that understand there is a need for government support to help, particularly health, but other levelling up, something I'm obviously hugely involved in, the Northern Powerhouse. You know, all of those things are fraught with practical and political difficulties. So I don't think investors will be suddenly become really excited about the UK, that's for sure. I don't think they'll be as freaked out as they were on Friday, but that could change before the day's out if Jeremy makes any mistakes today.
Jim, what do you think, you know, I don't know whether you saw it as a Bailey versus Truss kind of game of chicken last week, and whether this is 1-0 to Governor Bailey and what the Bank of England can do next.
Listen, I think, you know, Andrew Bailey came in for a lot of criticism from all over the place the past fortnight. And as you know, we've discussed it before, I think the bank has made mistakes in terms of monetary policy in the build-up to all of this in recent months. They should have tightened faster and more. But I'm broadly supportive of what the bank has tried to do here in a spectacularly difficult position. And it's definitely 1-0. It's probably more than 1-0 to the bank. I think the bank has handled the past 4 weeks, and particularly the past week, pretty well. They're obviously going to be watching all of this just as closely as the markets. And another sort of rinky-dink complication for the pound is, of course, if what the Chancellor goes ahead with and gives the impression of today is really credible, then all ideas of the bank raising by 1% will probably go out of the window too. So it'd be better for the gilt market, but the pound itself would lose any potential support from the scale of interest rate hikes that people have been talking about. So all of it is interrelated and obviously pretty tricky stuff to walk through.
Yeah, pretty tricky. We'll talk also a little bit about leverage shortly. And Jim, there's like Man U versus Chelsea. You don't think I'm going to ask you about that? It's like the O'Neill versus Lacroix square off this Saturday. So we will talk football as well. We'll have more with Jim O'Neill shortly. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
No one covers the world like Bloomberg.
The pressure cooker just got far too hot in Birmingham for the government to handle.
You foresee 2/3 of the crypto hedge funds will disappear. Are we close?
The European Union will support and defend Ukraine's territorial integrity.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
Economics, finance, politics. This is Bloomberg Surveillancer, the edition of Francine Lacqua here in London. Now, UK bonds surged at the open on expectations of more U-turns on the government's plans to cut taxes and increase borrowing. The new Chancellor, Jeremy Hunt, at the UK's fourth in as many months, is set to make a fiscal statement at 11 a.m. London time. Well, Lord Jim O'Neill is still with us. Jim, we were talking a bit before about the pitfalls and some of the uncertainty, of course, going on to also that inflation report from the UK on Wednesday. What do you do with housing right now? I know we're looking at leverage, and I guess the pension market was a stark reminder that you can, make money or get on if interest rates are at 1%, but we need to maybe look at the parts of the market where, it doesn't work at 5%.
So listen, I think linked to how I answered the last question before the break, I think there are clearly some on the MPC that are already worried about how much financial conditions have tightened. And given the amount of leverage effectively with our consumers, they have understandable concerns that if they raise rates too aggressively, too quickly, it's just going to add to the scale of pain to our consumers and deepen the recession. Whilst that might superficially help the fight against inflation, it might be too much. So all of that's got its own tricky part. A separate part of my brain is can't stop thinking this morning about this never-ending thing that one gets through periods of big tightening of monetary policy, where you suddenly find all these pockets of hidden leverage all over the place.
Yeah.
And what's going on in the UK here is a sort of if you make a parallel, God forbid that it ends up being the same, with 07 and 08, before the complete collapse of everything in 08, as you will remember, we had a few things that started 12 months earlier in the summer of 07, and in some ways, and I think that's going on in markets too, it's making many people think, well, what other pockets of excessive leverage are there in country X, Y, and Z? And all of this will remain an issue, obviously, as the Fed, being forced by the data, has to keep on tightening as aggressively as it's doing. So it's all very troubling. And I haven't even focused on the fact till I had lunch with somebody late last week. Later this month, we have some really important CPI data coming out of Japan, because we're getting closer to the point where the BOJ is going to have to abandon yield curve management there. And goodness me, when that goes, after, what is it, the best part of 20 years of QE in Japan, there could be endless fallout from all of that.
Jim, just going back to those parts of the markets which are too leveraged, is this shadow banking? And, what is the chance that something that we're not seeing now unravels to the extent that, we get a financial crisis like in 08?
I mean, this is another hope. I don't know, Fran. I really don't know. There's three things going to contradict in my mind. First of all, the regulators always do a pretty good job at putting in place, stopping a repeat of exactly what happened in the past crisis. So in that regard, it does look, secondly, as though the big banks are pretty well capitalized for virtually anything. However, there is no such as a free lunch, thing as a free lunch. And as we get from ridiculously low rates that seemingly were going on forever back to something vaguely like normality, the system has got to cope with all the ways of savings and borrowing needs have been met, which essentially must mean a lot of the so-called shadow banking system. So within the so-called real money community, we've seen it here in the UK with the gilt issue in the past month. There must be quite a few of those in different parts of the global savings pool, I would guess.
Jim, how much do you worry about the housing market? Could we really see a crash in the UK?
I mean, if you just look at what's happened the past fortnight and hear people, the housing borrowing market has essentially shut. And I was listening to some stories over the weekend from individual real estate agents, and the number of visits and people planning to go through with houses already visited have just dropped off a cliff. So unless the Chancellor's policies and his style succeed in calming down the gilt market, we already have got a reversal of the UK's housing market underway. hopefully, it won't turn into a complete collapse. But that obviously is, from what I can see now, completely dependent on the credibility of the government's fiscal policy.
Jim, when are you buying Man U? And I'm sad we're not, so I'm going to the Chelsea game on Saturday, and you're not going to be there. So we can't even, like, you know, have a bet on who wins.
There you go. Listen, from what I can tell, despite everything, the owners or the two of the 6 siblings that really control what will happen to Manchester United, for whatever reason, don't want to sell. They seem to still think either at some magical moment, some lunatic somewhere is going to pay them idiotic money. And in the meanwhile, they carry on treating it as this huge cash cow for them. And do they really care how United do, so long as it's in the news every day and they can do advertising deals? Sadly, they don't seem to care.
All right, Jim, I'm still betting on you buying it at some point. I don't know how you get a consortium together, but I'll continue trying to fly the flag.
Let me know when you figure it out, friend.
Yeah, we'll crowdfund it. Jim, thank you, as always. Lord Jim O'Neill there, of course, on everything UK and, of course, a bit of football. Coming up, the EU has a plan to rein in the bloc's energy crisis involving its biggest gas marketplace. We have the draft details. This is Bloomberg.
A digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's weird.
Like a weird floaty thing right now.
Oh, look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, this is a picture for gilts across the board. Quite a lot going on, of course, in gilts. We just also spoke to Jim O'Neill. He says, look, the jury is out on whether investors will come back into the UK. All depends on what happens at 11 a.m. with the new Chancellor, Jeremy Hunt, due to make a statement on measures to support fiscal sustainability. If you look at pound, it's rallied, UK bonds surging. Now, let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Goldman Sachs is downgrading its outlook for growth in the UK. That's after Prime Minister Liz Truss replaced her Chancellor and rode back on cancelling an increase in corporation tax. The bank says it now expects a more significant recession. Annual growth for 2023 is now minus 1%, down from 0.4%. Chinese President Xi Jinping says China is staying the course as it faces what he calls dangerous storms and growing challenges from the US. In an almost 2-hour speech to open the 5-yearly Communist Party Congress, Xi said China would pursue development while ensuring national security. He also said Taiwan reunification was a matter for the Chinese and hailed what he called the restoration of order in Hong Kong. A senior White House official says the US could change its approach to providing security assistance to Saudi Arabia. National Security Advisor Jake Sullivan told CNN that President Joe Biden could make a decision on relations with Riyadh after consulting with lawmakers following November's midterm elections. Biden told CNN last week there would be consequences for Saudi Arabia after it voted for OPEC to cut oil production. A delayed statement from G7 finance ministers and central bankers has laid bare divisions on issues including Russia's war in Ukraine and ways to deal with climate change. The statement was based on meetings last week as part of the IMF and World Bank's annual gatherings in Washington. It's usually released within hours of those discussions, but clashes between major nations meant that this time it took 3 days. Global news 24 hours a day on air and on Bloomberg QuickTake, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Coming up, a defying Xi, China's president declares that the nation's global power has increased while warning of dangerous storms ahead at the Party Congress. We're live from Beijing next. This is Bloomberg.
There is an epic saying in Italy when it comes to family generations that the first generation creates, the second generation expands, and the third generation destroys. And that's almost what happened in the Gucci story.
So hate and love together. Now I would have a much more experience about those who says I love you and then betrayed you.
The Gucci family was the strength, but also the weakness of the label.
The situation became dire with Gucci's finances. They were not able to pay salaries. They were not able to pay suppliers. Gucci's really teetering on the brink at this stage.
multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
Downing Street hot seat. UK bonds surge at the open on expectations of more U-turns by the government. The new Chancellor Jeremy Hunt is set to make a fiscal statement at 11 a.m. London time. Taking a stand, China's President Xi backs COVID-0 at his party congress and doubles down on policies at the center of tensions with the U.S. Chinese stocks slide. Plus, the EU plans to temporarily overhaul the continent's gas market with a dynamic price cap, its latest effort to rein in soaring energy bills. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, President Xi Jinping delivered a defiant message to the world in a speech at the Communist Party Congress that China is ready to stand its ground. Xi also signaled no change in direction for two main risk factors dragging the economy down: strict COVID rules and housing market policy as well. Let's bring in Bloomberg's John Liu in Beijing, who heads all of our Chinese coverage. So, John, what are the main key takeaways from that speech?
So I give you three key takeaways, Francine. One, on COVID-0, as you said, President Xi talked about how the policy had done good things for China. There was no indication of a change in direction on the horizon. And so we expect COVID-0 to continue. That being said, there was not as full-throated a defense of the policy as some thought there might be. And so I think the door remains slightly open for some change down the road, but we'll have to wait and see. On the economy, President Xi again reaffirmed that economic growth was the Communist Party's top priority. There had been some speculation that he might drop that line from his speech, which has been there for many decades at every party Congress. And finally, I would say on the diplomacy front, President Xi striking a defiant stance, talking about how all the ways that China has run its economy, run its diplomacy, done various things have worked, have been an alternative methodology, model for the world, for other countries to follow. And so setting up a very competitive meeting with President Biden at the G20 next month.
So, John, what's on the cards for the next couple of days?
So in the next couple of days, we will have briefings from the Congress. We had one this morning about the economy, about the state of the energy supply for China. There will be one later, for example, on diplomacy. We don't have the exact date for some of these briefings yet. The big event, though, will be this weekend. The Congress concludes on Saturday, the 22nd, and then it'll be on Sunday about noontime here in Beijing. We will get the new standing committee lineup. That will be the 7 people who will run this country for the next 5 years.
All right, John, as always, thank you so much for joining us. John Liu there in charge of all of our Beijing coverage. Now, we're also joined by Stefan Ost, author of Xi Jinping, the most powerful man in the world, and former editor of Der Spiegel. Stefan, thank you so much for joining us. A lot of questions about how China will be different after this People's Congress. What did you hear yesterday that could change the trajectory?
Well, actually, I think the opening of the party Congress showed very clear the direction in which it will go. It was all around the person of Xi Jinping. No doubt that at the end of the Congress, he will be declared leader for another term. Then he will be the only Chinese leader after Mao Zedong for more than 10 years. And Mao was the leader of a poor developing country, while Xi is leader of an economic superpower. That makes the biggest difference. And I think he's going to try at least to be the leader for his whole lifetime.
So, Stefan, what does it mean? We know, for example, that the Chinese president gave very little assurance on China's economic risks, right, that those will ease because there's no change in direction for some of the things that he's put in place. Where does that leave China going forward?
Well, actually, we don't really know. When we wrote the book, we were talking about and writing about his past and trying to tell the story of China along his lifetime. and his lifeline along the story of China. So we don't really know what will happen. But the interesting thing is that in a certain way, the economy of China is not a communist economy anymore. That has changed. It's a market economy. It's a capitalist economy. But at the same time, it's a one-party system. It's a one-party dictatorship. And now one single person will be on the top, at least for the last, I don't know, years, how long he will live. And the interesting thing is, if you have two power structures at the same time, an economic power structure with rich people, careers, people who make careers, connection to the foreign countries, to the global economic system, you need, if you look at it from their point of view, you need a very strong, let's say what it is, dictatorship to keep the businessman and the business in this socialist way. And what he invented is kind of, trying to fight corruption, and he decides who is corrupt and who is not.
So what does that mean actually for how the U.S. should deal with China? I know some of the questions, for example, is, the market's trying to figure out when they talk about technology, and is that an indication of whether they will support the sector? And of course, that would be, against what the U.S. has been trying to do.
Well, actually, the main reason for China's growth, economic growth, and the growth of its power, of its world power, is opening the borders. And first they were the working bench of the West, and Xi is trying to change that to concentrate more on China's own market. And at the same time, the national growth product is getting as big as the American one. So the Americans really are a little, not really a little, they are afraid that the Chinese will take them over. So not as a country, but be more wealthy and bigger than the American economy is, which is not a secret. If you have 1.4 billion people living there, compared to America, it's four times as many. But at the same time, the Americans try to keep it a little bit away from China and don't deliver everything that they need to China and not buying everything.
Do you see, Stefan, this anxiousness, or the world being split into two, the pro-US and the pro-Russia, and it's unclear where China falls into all of this?
Actually, I think this is a big danger these days, that we come back into a situation like during the Cold War, when you had one socialist part, communist part in the world, and the capitalist party at the same time, and always the danger of a big conflict. So I hope it won't go into that direction. But the danger is rather big, because the relationship between the Chinese and the Russians were quite close during the time of the Cold War. But right now it's getting as close as it used to be at that time, with one main difference. China is much stronger than it was during that time. And what they need is energy. And there's one country in the world who has energy en masse, that is Russia.
And so what does the U.S. do with this now? What's the right approach?
Well, actually, I wouldn't like or try to give them some advice, but I think it would be good not to let the confrontation go as far as it used to be during the Cold War time. I think we have to be in a world economy, and I think we have to make business with countries who are not on our, let's say, democratic level. Otherwise, it will get very cold for us.
All right, thank you so much for joining us. Stefan Ostler, author of Xi Jinping, the most powerful man in the world, and former editor of Der Spiegel. Coming up, Goldman Sachs sees its third major restructure under the chief executive, David Sullivan. That's according to the Wall Street Journal. We'll get more on that next. This is Bloomberg.
There's more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, Goldman Sachs plans to combine its flagship investment banking and trading businesses into one unit as part of a reorganization, the Wall Street Journal reports. Now, this makes David Solomon's third major restructure in just 4 years as chief exec. Now, for more, we're joined by Bloomberg's Charlie Wells. Charlie, first of all, good morning. I mean, this feels really dramatic because it doesn't look good on paper that they've had so many. Is it to build on what they had or change things around?
This is really difficult. So this is one of the biggest shakeups that the Wall Street firm has had in its history. And it's really notable. I think one of the most dramatic elements here is actually about consumer banking. Now, Bloomberg star Sridhar Natarajan has been reporting on this for a long time that, Goldman wants to backtrack from its consumer banking because Main Street has been a lot more difficult to crack than Wall Street. And we're seeing, that effectively being disbanded and then a simplification at Goldman, investment banking and trading in one unit, asset management and wealth in another, and then a sort of catch-all of transactions and tech. So it's a lot more simple than I think a lot of people were expecting.
So what does it mean for the chief executive strategy? I don't know whether it points to the fact that they're in trouble or we're also getting earnings tomorrow, I think.
So David Solomon, the CEO, moonlights as a DJ. And I think any DJ will be, reminded by that bzz kind of record spinning sound. And this is effectively another remix. Now, what he has really been trying to do is look for fees in any environment because Goldman, of course, is the epitome of the Wall Street bank. But at a time when there's so much volatility, when it's harder to get those fees, it really needs a new strategy.
So what are you looking for in the earnings?
Right, so those earnings are on Tuesday, and they're a tough act to follow because JP Morgan, actually had some better than expected metrics come out. We saw net interest income for JP Morgan, highest ever in a quarter. We're not necessarily expecting to see that for Goldman given its strategy. I mean, investment banking fees down 54% compared to last year, so I think it's going to be a struggle. One potential bright spot could be in fixed income, but that's just one spot.
All right, Charlie, thank you so much. We have to exchange. This is what happens. He comes on air, we talk a little bit about banking, and then we also talk a little bit about recipes, including autumnal recipes. So we'll put that out on social media.
Yes, let's do that.
For people that want to know a bit of both. Charlie Wells there with the very latest on Goldman Sachs. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Goldman Sachs is downgrading its outlook for growth in the UK. That is after Prime Minister Liz Truss replaced her Chancellor and rode back on cancelling an increase in corporation tax. The bank says it now expects a more significant recession. Annual growth for 2023 is now -1%, down from -0.4%. Rupert Murdoch wants to combine News Corp and Fox, recreating the media giant he split apart 9 years ago. The move would likely consolidate power in the hands of his son Lachlan, currently the CEO of Fox. So far, none of the Murdoch clan have spoken publicly about this deal, but the companies acknowledge acknowledged it was in the works, and that was on Friday. And Mercedes is broadening its battery-powered lineup with a new sports utility vehicle. The aim is to take on Tesla's Model Y, the car maker's latest step to go all electric by the end of the decade. The EQE SUV is the fourth model to use Mercedes' dedicated EV platform. And we spoke with the CEO, who says the energy crisis may hasten the move into renewables.
Europe in particular will be challenged in the next 2, maybe 3 years. We're working on fixing that, especially Germany that's been dependent on gas coming from Russia. So there's a lot of activity to deal with this short to mid-term challenge. But if we go and look a little bit longer, mid to long term, I think this may even be a catalyst to go quicker into renewables.
And that's your Bloomberg Business Flash, Francine.
Leanne, thank you so much. Leanne Gerrans there with the very latest. Now, we're also getting China delaying its third quarter GDP data release. It's giving no new schedule. Of course, we're just at the beginning of that People's Party Congress. We had a terrific briefing from our John Liu, our Beijing bureau chief, and we'll continue following that very closely. And as soon as we have a time and a date for GDP third quarter in China, we'll, of course, bring you that live. Now, European natural gas prices have fallen to a 3-month low on expectations of more measures from the EU to curb volatility. Now, Bloomberg has seen a draft document of the European Commission's plan to put a dynamic price cap on the EU's biggest gas exchange. Now, it's part of a range of measures to tackle the energy crisis. I'm delighted to be joined now by Maria Tadeo, who joins us from London. Maria, welcome to the studio. I'm so happy to see you in person.
Very good to see you.
Okay, I love the idea of a dynamic price cap. So what does it do on the tin?
Well, what it means, it's unclear, but Francine, the market likes it. I mean, you referred to it, the big moves down today on the gas futures. Now, this dynamic idea, in fact, it's not new. It was floated 2 weeks ago by the Italians. You know, they're very dynamic themselves on a lot of things. So, and what it does is that, look, it combines two things. This full cap, and then the countries that do not want to see a cap. Yeah. So in between, you meet with a dynamic price cap. What it means is that there is a level of free buy and sell in this market, in the TTF, but once you get past a certain point or a certain level of volatility, you cap it. It's like in stocks. You say, well, trading stops, and then beyond that, the transaction is closed. Now, that's what it means. But in reality, the big question, and this is what I asked my source today, what is the price swing that you would allow, and what is the price that you would say, we stop it here? And he said, well, that's the core of the debate, and there is no agreement on that. So fundamentally an idea, but the actual price that matters, I think that is to be seen, is going to be very thorny.
Yeah, it does feel like so European. I shouldn't say that, because I'm a big, I also believe in European things. They usually, you know, cut it to the wire and then something happens. And then do we know about implementation?
Well, the implementation we'll have to figure out, because, well, the timeline this week is that tomorrow we get the head of the commission, who, by the way, gave herself a deadline of October 20th, 21st to come up with big intervention. It's not just the cap, it's also the idea perhaps of storage for next year, how to buy things jointly, so really use the EU27 market to get a better price, which frankly seems like a no-brainer at this point. And then, of course, is down to European leaders. Thursday, Friday, I've been told, we know it starts on Thursday. What time it ends, I don't know, but Francine, the Thursday night, we're back in the 4-hour sleep.
4 hours if you're lucky.
Thursday to Friday if you're lucky, exactly.
Yeah, don't you get like 2.5? This is like a Maria today. Maria, I don't need to sleep today. Maria, when you look at actually at the moment, and we're seeing some pretty heavy strikes in Kyiv this morning by drones, at the moment it seems that Europe is holding together, or at least are more or less on the same page. How difficult is that going to be as we get into the winter months?
Yes, it is. And Francine, by the way, we heard, because this is a very serious, of course, issue. We've seen the pictures out of Ukraine this morning. The top European diplomat, Josep Borrell, came out and said, we need to really find out and figure out whether Iran is doing this, because if they are, then that means more sanctions are potentially coming. And by the way, there's already sanctions that are being debated because of this crackdown, brutal on the women of Iran, which is, well, we've seen the pictures. It really is heartbreaking in so many different ways. I think in terms of the unity so far, they have agreed on everything unanimously, but it really will depend on this winter, the bills, the social pressure. They're very aware that social backlash, of course, could really change the narrative we're in with Ukraine for the long haul.
Maria, thank you so much. Maria Tadeo there on this very important story. Now, coming up, we look closer at the bond market as gilts gain across the curve. That's coming up next, and this is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
You have to look at UK, and it's been a Greek tragedy what we've seen in UK over the course of the last week with some of the policy announcements and the back and forth.
We're at risk of talking ourselves into a worse position than we are. This is not yet looking to me like a very steep and deep recession.
Also in some of the other markets where housing is a major component of their economy, so whether it's Hong Kong or Australia, you start to wonder if they aren't the next ones to look.
The Chinese economy has been in a recession for some considerable time.
In the real economy, for example, bankruptcies, we see already bankruptcies increase. It started in Spain, in Europe, and then in the UK very clearly, and now it's reaching Italy and then France and Germany.
To me, the next risk in markets, the next downturn, is the realization that the economy is going to have to slow a substantial amount to meet those inflation goals.
It doesn't mean the whole world is going up in smoke simultaneously, but when you have a situation where we've had very low interest rates for so long and the world was adapted to it, now that central banks are raising interest rates, it changes things.
Well, some of our guests there on where the next recession could be, which was our Markets Live question of the week. Now, a rally in gilts this morning ahead of the new chancellor's statement has bond markets breathing a sigh of relief. Our markets editor, Valerie Teitel, is here to take us through it. Valerie, so what does this mean for broader markets and the Fed?
Yes, Francine, I'm going to maybe go out on a limb there and saying that this is some first steps to some calm being restored to the gilt market. Now, we know that it has had an unprecedented amount of volatility, which has been aggravated by a worsening liquidity situation. I have a chart here, which is the Bloomberg Gilt Liquidity Index, which has shown how catastrophic the situation has been in the last few weeks. But if we look forward to what this means to other central banks, if, for instance, the gilt market does find some calm, liquidity does return, maybe that puts more pressure on other central banks to hike more rapidly. You could say, for example, that the ECB may no longer be worried about liquidity in their BTPs. They don't need to use the TPI tool just yet. They can continue with their jumbo hikes. Also the same with the Fed and Treasuries. Janet Yellen warned us last Thursday that she is worried about liquidity in the Treasury market. But if the gilt market returns to normal liquidity, maybe that calms the Treasury market too. And hey, that could tee us up for back-to-back jumbo hikes from the Fed going 75 in November and December if they're no longer concerned about this systemic risk to financial stability impeding their ability to tighten rates.
So, Valerie, the biggest concern, of course, is this, sharp rise in interest rates, and there are places in the market that are leveraged that are fine at 1%, that are not fine at 5%. How difficult is it to get through those? Are there parts of the market that you look at to give us an indication of what happens?
Yeah, so that is a key risk for central banks moving forward. There are a few metrics we can look at that might give us some hints of stress. One of them is short-term funding in the dollar market. We know that's become even more stressed than it was over the Russia sanctions. And then these things like these liquidity indexes, like that is going to be the key driver of the hiccups, in my opinion. It's less so about where the rates rise to, but do central banks need to pause in order to rein in financial stability, i.e. liquidity concerns in their bond markets first?
Thank you so much, Valerie. Our markets editor there, Valerie Teitel, and the very latest on gilts. Now, it is going to be a pretty busy day and busy week for UK assets overall. The pound did rally, UK bonds surge amid expectations that Prime Minister Liz Truss's package of unfounded tax cuts may actually be reversed. The proof is in the pudding, one of my favorite expressions of the British language. The Chancellor, Jeremy Hunt, due to make a statement in about an hour and 5 minutes from now on measures to support fiscal sustainability. It's the start of what may be a particularly torrid week for UK assets, so we'll keep a very close eye on that. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller in New York, Anna Edwards here in London, and this is Bloomberg.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy. I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish. And complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14.
When U.S. inflation numbers are released,
the score is inflation one fed nothing today.
Bloomberg brings you crucial data at terminal speed.
Core CPI in America, 40-year high.
Yields are absolutely flying.
Equities down and down hard.
It's ugly.
And instant expert analysis.
What is the makeup of this inflation?
We are watching the underlying fundamentals.
Will they go 100 basis points?
The downshift just keeps getting pushed out. Now it looks like we're going into extra innings.
Nobody covers the economy like Bloomberg, your global business authority.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. Welcome to Bloomberg Crypto.
The last few years has been a challenging business environment with COVID, with supply restrictions, And of course, also the war in Ukraine.
Look, I think this is probably going to be a textbook case of crisis creation followed by crisis mismanagement.
The market is really all about short-term trading swings, nothing about fundamentals.
There's a lot of bad already booked in this stock market. So we could have a recession, and I'm not so sure the market has to go a lot lower.
I think the U.S. is in a very different spot than the U.K., right? You have a situation in the U.K. where I'd call it a crisis of confidence.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Downing Street hot seat. The UK's Liz Truss battles to rescue her premiership. The pound and gilt's gain on expectations of more U-turns as new Chancellor Jeremy Hunt is set to make a fiscal statement in an hour. Taking a stand, President Xi strikes a defiant tone at his party congress, letting the world know that China wouldn't change course and warned of dangerous storms ahead. And yet another overhaul at Goldman Sachs. David Solomon is embarking on his third major reorganization in just 4 years as CEO. Goldman and Bank of America take their turn in the earnings spotlight this week. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Kaylee Lines is off today. And Matt, relief in UK assets, it seems. We'll watch for the statement from the Chancellor in an hour's time. But relief in risk assets more broadly, globally, actually, this morning.
Yeah, absolutely. We see that around the world, not in Japan. Take a look at the Nikkei down a little over 1% at the close. These markets are closed right now, but the Japanese had a little bit of a drop here, and you can see that the pound had a little bit of a drop as well. The dollar gaining a little bit against the pound at 148.73. So we're getting back to those record levels. The Hang Seng and the CSI 300 were up just a little bit overnight, but you really see that relief in U.S. equity index futures. So take a look at S&P futures this morning. They're up. Of course, we had a huge drop in the cash trade, more than 2% on Friday. But right now we have S&P futures up full 1%. Maybe the concern about, I think, what drove us down on Friday near the end of the session or after the release of the economic data was the University of Michigan consumer confidence and, of course, the inflation outlook that's really been the key. The U.S. 10-year yield right now coming down a little bit, 395.90. We're really watching gilts, though, so we're waiting for your boards here, but I'll just show you the dollar index coming down at 1346. You see the pound gaining over there, and crude right now, little change to 85.68. It's really a story all about the UK right now, Anna, because in just an hour's time, we're going to get more from Hunt.
Yeah, absolutely. So the new Chancellor, the fourth, that so far this year, if you're still keeping track here in the UK, will make a statement in around an hour's time. Let's have a look at what markets look like as we work our way up towards that then, Matt. This is a picture of strength coming through on European equity markets. We started off in negative territory, looking to catch up with what we'd missed of the Wall Street session on Friday. The Nasdaq was down by more than 3%, of course, but then we've turned that around. We've gone instead with the direction being set by US futures. They pointed in a more positive direction, and as a result, we've got European equity markets moving substantially or actually modestly higher this morning, up by 0.3% or so. Here are the UK assets that you just mentioned, Matt, and so important to get to those. The 30-year gilt yield then falling, and we see demand for gilts. We see demand for fixed income across various geographies, I should point out, but that does look to be specifically the case in the UK. We are seeing gilts coming down, gilt yields, coming down across the curve, and more substantially than we see it in other geographies, 30 basis points off the 30-year, as you can see. We went above 5% on this particular long-duration debt product at the height of the concerns around the UK. 112.70. The question is really, though, are UK assets rallying on what we've seen already, the U-turns around the top rate of tax, corporation tax, the changing of the guard when it comes to the Chancellor, or is it about changes still to come? Is it about policy U-turns to come, or is it just a different emphasis, a change of tone, and a different recognition, I suppose, of market pressures and the current state of the market from the new Chancellor that we're focused on here? Natural gas prices down by 6%, more on from our colleague Maria on this one, but a dynamic price cap, whatever that means, being talked about in Europe, and she'll help us to understand what that means. And we're not seeing moves higher in gas prices, despite those lines coming out of China earlier that they don't want to send any spare gas that they have, LNG gas that is, to Europe. So that was an interesting narrative. And ITV, I put this stock specific in there just to show you there is still some corporate activity taking place. But that stock up by 8.3%. It's a TV broadcaster, but this is in connection with newspaper reports that suggest their production arm could either be up for sale or they could be interested in some investors in that particular business. So an interesting one there to unlock value. Let's turn to the UK political story, though. The new UK Chancellor, Jeremy Hunt, is due to make a fiscal statement on Britain's fiscal plans in less than an hour. Bloomberg's Lizzie Burden joins us now from Downing Street for more on what to expect. Lizzie, what do we expect?
Well, Anna, we're expecting a near total dismantling of Trussonomics by Jeremy Hunt this morning. More tax cut reversals. Our economists at Bloomberg Economics say he needs to find £24 billion worth of revenue raises. Part of the logic behind bringing all of this forward is it allows the fiscal watchdog, the Office for Budget Responsibility, the opportunity to change its forecasts so that markets can reduce the cost of borrowing, so that the fiscal hole that Jeremy Hunt has to fill shrinks. But really, we've got a good communicator now at number 11 Downing Street. He's been steering us towards this all throughout the weekend. You've seen gilts rallying at the open, even if the pound's pared some of its lost some of its gains already. And then the question becomes, if Hunt looks like he's in charge, what is the point of having Truss in number 10? It's a question that 3 MPs have already given us their answers to publicly. They want her to go. Behind the scenes, more are asking themselves, do we roll the dice on a new leader now, accept that we're going to have a snap election, or do they cling on for almost inevitable annihilation in 2024? It's a desperate situation for the party, but given that Hunt seems to be now in the driver's seat, Truss may have inadvertently hired her successor.
All right, Lizzie, thanks very much. Bloomberg's Lizzie Burden there reporting from Downing Street. Let's get over now to China, where President Xi Jinping delivered a wide-ranging speech yesterday, laying out the Communist Party's agenda over the next 5 years, covering everything from Taiwan to tech policy. Xi said China is staying the course as it faces what he calls dangerous storms and growing challenges from the U.S.
We must meet obstacles and difficulties head-on, ensure both development and security, and dig deep to surmount the difficulties and challenges on the road ahead. Let us harness our indomitable fighting spirit to open up new horizons for our cause.
John Liu, Bloomberg's executive editor for Greater China, joins us now from Beijing. So, John, what did we learn yesterday from Xi's speech?
So I think there were 3 important takeaways. One, there with the clip that you showed, the messaging for the United States, for countries in the West. China is not backing down. China knows what it's doing. It's run its economy well. It's run its diplomacy well. It's built up its military. That was the message that Xi Jinping had for the country yesterday. And China is not planning to change its ways. That, I think, is the message for President Biden going into the G20 and a face-to-face meeting we expect the 2 presidents to have there next month.
Any updates on COVID, John? Did we take anything away on that front?
Well, President Xi did talk about how COVID-0 had done great things for the country. He did not offer a change in policy on the horizon. That said, he did not give as strong a defense of the policy as some expected he might. That leaves the door open for some changes heading down the road, but we'll have to wait and see. He also talked about the economy. Obviously, that's been a victim of COVID-0. And he made the point that economic growth remains the Communist Party's top priority. Some people had worried that language around economic growth would change. He's affirmed that, and that should provide some soothing messaging for the markets.
Okay, John, thanks very much. Bloomberg's John Liu reporting there from Beijing about what we've heard from the leadership. We are not going to hear about Chinese growth, though, imminently. It was due to be released tomorrow, but China has delayed third-quarter GDP data. That no longer coming through to us tomorrow, and no new schedule has been given for that data to be released. Let's turn our attention to Europe. European natural gas prices have fallen to a 3-month low on expectations of more measures from the EU to curb volatility. Bloomberg has seen a draft document of the European Commission's plan to put a what's called dynamic price cap on the EU's biggest gas exchange. It's part of a range of measures to tackle the energy crisis. Bloomberg's Maria Tadeo joins us now. Maria, very good morning to you. So the market seems to be reacting quite positively then to this talk of a dynamic price cap. Explain what that is and what's happening here.
Yeah, the market wanted to see intervention, and it looks like this is a type of intervention. The exact definition, I don't think anyone knows at this stage. This is still very much work in progress. But the sound of it, the market, clearly the reaction today at one point, of course, gas futures were dropped or down 7%. Now, the idea going back to the definition of dynamic, this is not really a new concept. The Italians already pitched something similar 2 weeks ago. And what they want is to see consensus between those that want to see a full cap and countries like Germany and the Netherlands who say, I don't want to see any caps because it could be a problem for supply. So what it means is in the market, there would be free buy and sell, but if there's a day of volatility or prices go past a threshold, you'd say, okay, we'll limit up, we're going to close it, the transaction is done, and that's your dynamic price cap. Now, this is work in progress. I've been told the key here is the volatility on the intraday and the price, and on that, I'm not sure we're very close to a consensus or an answer to that.
I want to get an update on the war. We heard this morning that Russia has hit Kiev again with kamikaze drones. What do we know?
Yeah, and Matt, this is another, well, terrible Monday for Ukraine, and we have seen the pictures, terrible pictures coming out from the Ukrainian capital. Of course, they blame the drones. The question is who is supplying them and who is a maker of them. There's a lot of questions around Iran, and today, by the way, we heard from the top European diplomat, Josep Borrell, who says they will now, at least the European Union, try to figure out who is supplying this, and if it is indeed Iran, there will be more sanctions to come on the country. On top of the sanctions, by the way, that they will debate about the massive and horrible crackdown that they've done on young women in the country.
All right, Maria, thanks very much for the update. Bloomberg's Maria today giving us the latest on pricing mechanisms in Europe as well as the war that Russia is waging in Ukraine. Now, in banking news, Goldman Sachs is said to be combining its IB and trading businesses into one unit. That's as the bank embarks on its third major reorganization in just 4 years. Bloomberg's Wall Street correspondent Sonali Basak joins us now with the details. So another big move from David Solomon, some of this undoing changes that he just made in 2020.
Yeah, this is David Solomon's 4th year as CEO, and you're seeing him making some major changes, the most notable being some of the consumer banking changes you're seeing. As he does this reorganization, you can expect 3 major business lines within Goldman Sachs, one being platform solutions run by Stephanie Cohen, who had overseen that consumer business. That will entail transaction banking, it will entail the Apple, GM partnerships, any other partnerships. But IB and trading, to talk about that for a second here, you do have that business that is more than 60% of the firm still by net revenue, sometimes a lot more in certain quarters, depending on how well the business is doing. The question that David Solomon keeps on having to do for or answer for investors is what role does the consumer banking operation play? How profitable is it supposed to be over the long term? And how does it keep Goldman Sachs more stable in different types of environments? These are consistent questions for Goldman Sachs.
Yeah, consistent question. And we've talked about the retail side of Goldman in recent weeks, haven't we? Some of our reporting, Sonali. So looking ahead to this week, we're going to hear from Goldman and Bank of America this week. What do we expect?
For Bank of America, remember, JP Morgan had increased their net interest income projections for the year. Can we see similar moves over at Bank of America with that boost you're getting from net interest income, while also a better sense of a handle on costs? There's a lot of questions about jobs out there in the market. Does Bank of America have to cut any to keep their costs in line? Same with Goldman Sachs. We've heard a lot about this story all year. They're kind of led, if you will, on this idea of efficiency this year, levers on compensation. Remember, at Goldman Sachs, with this leadership shakeup, we'll expect to hear a lot more in their earnings call tomorrow, as leaders are expected to change across business lines. We've reported many of them in Bloomberg's story today, so I suggest everyone take a look on just how much is changing, because it is certainly a lot, Anna.
Sonali, thanks very much. Bloomberg's Sonali Basak with the latest on the banking sector. Coming up on the programme, we will be talking about the UK and indeed about China, different political dynamics to discuss today with Robin Niblett, who joins us, a distinguished fellow at Chatham House. We look forward to talking to Sir Robin Niblett a little bit later on. And John McClain also with us, Brandywine Global Portfolio Manager. What is his strategy look like right now as we head, well, towards the end of the year, I suppose we could say now. Plus, how Russian ships are laundering grain stolen from occupied Ukraine. Read more on today's Big Take story. That can be found online or on the Bloomberg terminal. This is Bloomberg.
make it very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much like the consumer is paying them. And so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value and the kind of transparency that they want.
Are you seeing a labor shortage right now? And what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about like going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Season is here.
Markets bracing for another big earnings season.
Everyone is expecting it to be poor.
We've had big markdowns on earnings.
Bloomberg breaks the numbers first.
The bar has already been set pretty low.
The big question is, can it go lower? We're seeing some pretty bad earnings already from those who have reported.
With exclusive expert analysis.
Which aspects of the market are not sufficiently priced?
Is this a macro huge headwind?
There is some really bright light at the end of this tunnel.
When is this floor going to come? When can I start buying?
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Kaylee Lines is off today. Now, the new UK Chancellor Jeremy Hunt is due to make a statement on Britain's fiscal plans in less than an hour. This comes as Liz Truss's position as UK Prime Minister is coming under increased pressure following a series of U-turns on a mini budget. Joining us now is Robin Niblett, a distinguished fellow at Chatham House. So, Robin, really good to have you with us. Thank you very much for joining us. What would you put Liz Truss's chances of survival at right now? I think we've only seen three, maybe, MPs from the party come forward and say that they don't want her to be Prime Minister anymore. Of course, there's a lot of talk about people behind the scenes saying that, less openly. What is your expectation for whether she survives?
Well, incredibly difficult question. First thing I'd say is that a lot, I think, depends on whether markets stabilize this week. Let's see how Jeremy Hunt performs at 11 o'clock, what he puts on the table, what more he rows back, and how he closes that very large hole that some people estimate being between 60 and 70 billion, not just the 45 billion that was in the quasi-Kwarteng budget. I think if markets stabilize, then the desire of the Conservative Party not to reveal its continuing deep divisions by having another leadership contest will prevail over the deep disappointment, frustration, anger at the performance of the Prime Minister over these last 6 weeks.
We have a new Chancellor, of course, then, Sir Robin. What should the focus of Jeremy Hunt's address today in, as we say, less than an hour's time? What do you think the focus of his address should be? Clearly, he wants to try to stabilise or continue to see stability in UK assets. What should he focus on?
Well, I mean, I think most of the reversals of the tax package have been fairly well trailed, and so I think, as people have been saying, they'll probably be torching most of the quasi-Kwarteng mini-budget, barring the step that had already been taken on national insurance, lowering that level, which was supported by Labour. That's only going to save, along with a couple of other measures, stamp duty probably giving about 15 billion of the 45 billion hole. And as I noted earlier, a lot of the estimates are there that it might be a 60, 70 billion shortfall. So I think where he's going to have to focus actually is on the discipline of spending. That is the really difficult part. This government isn't just rolling back the tax cuts, if you want to call them, or the tax savings. They're actually going to have to make public savings in public spending. Where do you do that as you're digging out from the COVID crisis? You can't do it in health. You can't cut education anymore. I think there's some hope that they can move the markets with this sense of stability and therefore reduce one of the very important new big expenditures, which is the larger spending on the debt. Debt has risen, debt is more expensive, the UK is spending a lot more on it. If they can change that expectation, that may shave another 5–10 billion a year off their expectations.
What does this mean, Robin, for life in the UK and for the possibility of a recession that's deeper than maybe had been previously expected?
Look, I think the possibility of a recession is high, not least because mortgage rates are up way higher than they were before. Mortgages tend to affect those parts of the British economy that spend. It is that middle class space that is so important for economic activity. So, yeah, and of course, if there is a sense of recession, then the GDP growth figures are going to be, well, obviously negative if we're in recession. That then makes the ability to hit the growth targets necessary to make the economy have its sums add up that much more difficult. So look, we were looking at maybe squeezing a 0.3, 0.2, 0.4% gain in GDP next year. It might now be heading into negative territory. It's just very, very hard to see right now.
Is there any chance, as they're looking for levers to pull on, kind of to put things in reverse, as it were, is there any chance that they can reduce some of the hard Brexit measures that haven't been good for the economy?
Look, unfortunately, again, the best that can be done right now is not to make things worse. Brexit is, whatever some people say, a drag on the British economy. It is costing it potential growth for as long as it takes to get into a better relationship with the EU. What we were worried about, a lot of people were worried about under Liz Truss, is things might get worse with a confrontation over the Northern Ireland Protocol. Already Liz Truss was rowing back on that, better mood music, but all we talk about here is not making things worse. I think there's no capacity right now to make the situation better with the EU economically.
A lot of people have made quite a big deal, Robin, and I wonder what your view of this is, of some of the changing mood music around some of the Brexit themes in the UK. So slightly better tone over Northern Ireland negotiations, for example, reported over the last couple of weeks. A piece in the Telegraph over the weekend saying Project Fear, which was the sort of Brexit arms view of the Remain side, Project Fear was right overall, talking about the reduced standing of Britain in the world. Do you read anything, either short or long term, into that kind of narrative?
Well, the extent the Telegraph is even putting this stuff up is a change in tone. But I'm afraid the battle lines within the Conservative Party are deeply, deeply written. And it's one of the reasons why I think they can't afford right now another change of Prime Minister, because there are many people who've staked their careers, their whole political lives, on the belief that when the UK leaves the EU, growth will be unleashed. And this is part of what the kind of Britannia Unchained idea of Kwasi Kwarteng and Liz Truss was about. So to simply abandon that, say, oh, we've got to recognize there are costs, would require a complete rebooting of the relationship. Remember, Boris Johnson signed what was the thinnest possible trade deal with the EU, the Trade and Cooperation Agreement, which, by the way, just by naming it is kind of the weakest type of trade agreement you would have, to improve the terms of British access to the EU markets would be a long-term process, something that you would probably have to go into the next election as part of your platform. But as I said, you can't make an adjustment in the literally 2 to 3 to 6 months that we're talking about here to steer the economy in the right direction. I'm afraid as I said, there are people who have staked their careers on this. They're inside the Conservative Party, and they will make life very difficult if Liz Truss were to try to turn the boat around too sharply.
I wanted to just ask while we have you, Robin, because you're also a senior fellow at the Asia Society Policy Institute. What was your take on Xi's speech yesterday? How do we know that China's sort of setting its course going forward with him in a third term?
Look, with Chinese politics, as I read it, and there are many people who know Chinese politics better than I do, but as I read it, we are where Xi Jinping had already planned us to be 2 to 3 years ago. You know, he set up in 2017 the plan that he would be able to extend his term into an unprecedented, at least in the modern era, third term as the leader of the Communist Party. So that's in itself a big shift. I think until we see who are the winners and losers of the merry-go-round and who's going to be on the standing committee of the Politburo, which we won't see until the 23rd, after this 20th Party Congress has been completed, we're not going to get the full picture. But from what he gave in his speech yesterday, no shift in the COVID policy, a strong statement about rejecting foreign interference, but I thought very importantly, some nuanced language on Taiwan. Yes, you know, a refusal to take the use of force off the table if they're forced, but a very strong statement for the preference for a peaceful transition, and very importantly, associating changes in Taiwan with the national rejuvenation of China. This phrase, the rejuvenation of China, is linked very much to the 100th anniversary of the founding of the People's Republic, which takes place in 2049. So, you know, a lot of people have been worried that 2027, in 5 years' time, might be a sort of unwritten deadline over Taiwan. A lot of the experts who are looking at this speech feel that he's been trying to buy some more space to focus on what is a really difficult domestic agenda. You know, a property market that's on its knees, an economy that's not growing fast enough because of the COVID lockdowns, global export markets, which China still depends on, in very tough position because of the recessions in Europe and
Thank you, Robin.
In America.
Thanks so much for joining us. So Robin Niblett of Chatham House. Yes, a very comprehensive answer, and we really appreciate it. Thank you so much for joining us. Next up, we'll talk about markets once again. John McClain joins us. Brandywine, a global portfolio manager, will get his take, or as futures point higher. This is Bloomberg.
Apple has identified its next big business, bringing advertisements to more parts of your iPhone. Today, Apple pushes ads in 3 places: the App Store, Apple News, and the Stocks app. In the News and Stocks apps, Apple shows display advertisements. That means that third-party companies like car dealerships or mortgage lenders can showcase their advertisements just like they can on a website. On the App Store, the situation is different. There, Apple has search ads. This allows developers to buy their way into showing up higher on search results. For instance, an App Store developer can bid for the term car racing or basketball so their apps will surface above competing apps in the list of results. Apple's push into ads is a little ironic, given that its ATT, or App Tracking Transparency Privacy feature, limits the ability for Meta, Snap, and even smaller developers to generate as much revenue as possible from advertising. That's because the feature allows users to choose if they want their data collected and tracked across third-party apps and websites. Still, Apple's hoping to expand its own ads business and is planning to add search ads to its Maps app. Other areas where ads could eventually appear are on Apple Books and Apple Podcasts, along, maybe one day, with an ad-supported tier of Apple TV Plus to compete with new offerings from Netflix and other streaming video providers. I'm Mark Gurman. This is Power On.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Downing Street, hot seat. The UK's Liz Truss battles to rescue her premiership. The pound and gilt's gain on expectations of more U-turns as new Chancellor Jeremy Hunt is set to make a fiscal statement in half an hour. Taking a stand, President Xi strikes a defiant tone at his party Congress, letting the world know that China wouldn't change course and warned of dangerous storms ahead. And yet another overhaul at Goldman Sachs. David Solomon is embarking on his third major reorganization in just 4 years as CEO. Goldman and Bank of America take their turn in the earnings spotlight this week. I'm Anna Edwards in London with Matt Miller in New York. Kaylee Lyons is off today. And Matt, risk appetite seems to have returned. US futures point higher. European stocks, almost all sectors are higher. But utilities, the biggest gaining sector, doesn't have an incredibly bullish feel to it.
Yeah, no, it's really kind of the roller coaster just continuing, right? After we dropped on Thursday, post-inflation figures, then saved by the algorithms, so many people say. Friday, pushed back down again by inflation expectations to the tune of more than 2% in the cash trade. So now we're seeing a bit of a bounce in futures this morning, still 4 hours to go until the bell, but we're up more than 1% on S&P futures. The U.S. 10-year yield coming down, so investors buying that debt. Right now it's 394.26. I heard someone this morning say you won't realize things are normal in the UK. I think it was Marcus Ashworth, until your 10-year yield on gilts is lower than ours on treasuries. And we're getting there to some extent, although this isn't really helping that calculus. The U.S. dollar index coming down a bit. We do see a stronger pound, stronger euro against the dollar. Right now, 13.45 is the Bloomberg U.S. dollar index level. And NYMEX crude unchanged right now at 85.60. So not telling us a lot about risk appetite, but that could be good news for stocks as we get closer and closer to the open. Anna, what do you see in Europe?
Yeah, I've got to focus on UK assets for you, but before we get there, the stocks across Europe, broadly speaking, up today, up by 0.6%. As I mentioned to you, Matt, most sectors in positive territory, but utilities the biggest gainer there, so a slightly defensive feel perhaps to that. And some of the moves that we're seeing in commodity markets, of course, maybe behind that. Here's the UK focus then. I haven't got the 10-year yield for you, Matt, but I've got the 30-year, 4.43%. And it's an interesting question to ask where this should settle out, because, of course, we're seeing buying of gilts. We're seeing some relief in the markets. The Bank of England not active in the same way that they were. They do have some schemes in place. You can go post collateral at the Bank of England in exchange for cash if you're certain types of pension funds and they're hedging managers. But we are seeing, broadly speaking, the market's managing to survive on their own. And we see yields coming down by 35 basis points at the long end. But where should we settle? This is still well above the sort of 3.5% we were at before we got the run up to the mini budget. Of course, it's a rising rates environment. And should there be a premium attached to UK assets as a result of what we've seen in recent weeks? The pound at 112.86, so recovery once again in UK assets there. But this is in anticipation of U-turns still to come. And what happens if we don't get any? That's one of the questions, of course. Natural gas prices down by 4.5%. As we were hearing from our colleague Maria earlier on, Matt, this all in connection with a dynamic price cap, it's being described as now. Will we be able to see any agreement, though, across European leaders? They will meet later on this week to talk about it.
All right, we'll be looking forward to that. Also looking forward to earnings coming across today. We're going to get a number of big banks, Bank of New York, Mellon, Bank America coming out with earnings, Schwab coming out with earnings. So it'll be interesting to see what we get this morning. Truist as well. John McClain, Brandywine Global Portfolio Manager, joins us now to talk about what to expect. Is this going to change our focus, John? We've been so macro, and you can see that, you know, the UK gilt market moves developed markets around the world. Are we going to start to focus in really on earnings now?
Yeah, it's time to pass the torch from macro to micro here, and I think earnings will be fine in 3Q, but really it's all about the guidance for 4Q, and I think that's where we're going to see the weakness, and I think that's really where that narrative is going to form around we are in a recession, going into a recession. There's no real way to avoid it here, and so we're waiting to hear, at the micro level from companies about what they're seeing on the ground and how quickly things have changed.
You're focused in on high yield and corporate credit strategies specifically. What are you looking at?
Yeah, what I'm looking at is really capital allocation priorities for management teams. And what we've seen is a meaningful shift. And that's why we want to go long CEOs in corporate America and short politicians. We say that, look, corporate America is focused on profitability. I think that a lot of these companies are going to be proactive on their labor force. meaning reduction in labor force to maintain margins. And really, I think that since COVID, companies have been focused on liquidity and preserving liquidity on the balance sheet. So we come into this recessionary type of environment from a place of strength in terms of the balance sheet for corporate America.
Good to speak to you, John. You want to see that passing of the baton from the macro to the micro, but to linger on the macro for a moment, do you still see spillovers from what we've experienced in the UK and that big rise up and run up in gilt yields? Do you still see evidence of that in the markets in which you are active? I'm thinking of US corporate debt or collateralized loan obligations and various parts of the market that people have reported to us. You've seen sort of sympathy selling.
Oh, absolutely. Spillover from the biggest, most liquid markets, really the underlying risk-free rate determines pricing across every other asset class. And so when you can't accurately determine what the value is of a 30-year gilt or a 30-year U.S. Treasury, it makes it really hard to price equities and high yield and corporate credit risks. So until we slow down the rate volatility that we've seen in developed market economies, I think we're going to see meaningful volatility in our marketplace, and that's going to go on for the foreseeable future here. And really, again, yes, I see the risk of many more policy errors because politicians are focused on appeasing constituents across the globe. They're not listening to shareholders.
Yes, I mean, we had a nice piece out over the weekend talking about a wider tug of war between central banks and governments. John, do you see that playing out in other geographies?
Absolutely. I mean, I think, the UK fired the first shot. I think Europe's going to really struggle here. I think we're going to be fighting inflation with fiscal stimulus. We've done a little bit of that in the US already as well, and I think there's more to come, and that's not the right medicine for the market, and that prolongs the pain.
Wait, fighting inflation with fiscal stimulus? Doesn't fiscal stimulus sort of cause inflation?
Absolutely. But, I think a lot of politicians haven't read Economics 101 textbooks.
Yeah, I guess that makes sense. Listen, the liquidity is a problem, especially in your markets, right? Well, we heard Janet Yellen last week say she's concerned about it in treasuries, which was, I think, very interesting. And it looks like the tide continues to go out. How does that affect your strategy?
Oh, absolutely. Look, everyone wants to talk about the Fed put as it relates to equities. There is no Fed put as it relates to equities. The Fed put is around functioning capital markets, functioning fiscal marketplace. And when you go back to COVID and you couldn't spot a treasury, you couldn't trade, in the biggest, most liquid markets, that was a real problem. And we're not completely there yet, but certainly we've seen a meaningful deterioration in the marketplace. And as it relates to my marketplace, in particular in high yield, we've really seen the dealers, Wall Street, step away from the marketplace. They're not providing liquidity in the market today because, the banks are focused on balance sheet. They're licking their wounds from underwriting a lot of, pretty nasty LBO deals here. And so, yeah, I think that liquidity is challenging. I think that the Fed should be paying attention to this, and I think that the Fed most likely breaks financial markets before they break inflation.
Yeah, that's interesting. We've talked about that a few times, and so you warn us, be careful what you wish for. Slowing hikes means something broke. We will watch to see what breaks then. John, thanks so much for joining us so early. John McClain of Brandywine Global, thank you for your time. Coming up on the program, trading crypto without volatility, how investors are finding ways to make money without Bitcoin's wild swings. More ahead. This is Bloomberg.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer, like Marriott's Leni Oberg.
One of the most important things is looking around the corner.
Adrian Mitchell from Macy's.
We have to let go of the traditional legacy department store.
And Luca Zaramella at Mondelez.
We tend to believe that all consumers are equal. They are not.
Look for Chief Future Officer on Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London. Kaylee Lyons is off today. Well, a rally in gilts this morning has bond markets breathing a sigh of relief. Valerie Teitel takes us through what this could mean for broader markets and for the Fed. Valerie?
Thanks, Matt. I'm going to go out on a limb there and say that this means that liquidity and the dampening of volatility is going to happen now in the gilt market. As we know, the liquidity has been worsening and worsening even over the weeks that the BOE has done their operations. But now that we have some calm restoring to the market, I think the key theme for this is that the calm is going to go into treasuries and then into BTPs, which is actually going to embolden those central banks to hike rates more. I think that this means we are teed up for 75 basis points back-to-back jumbo hikes from both the Fed and the ECB as we head into the close of 2022.
Okay, Valerie, thank you very much. Valerie Teitel with her views on what's happening in gilt markets and the spillovers into other markets. You can see Valerie's charts and all of our terminal analysis via GTV Go. That is the function to use on your Bloomberg terminal to get hold of those charts we discuss. Eddie van der Belt joins us, Bloomberg Markets Live editor. And Eddie, we want to talk to you about crypto, but let's linger on what Valerie was just proposing there, which is that if this is the start of more calmness in bond markets, does that mean central banks feel more emboldened to hike and perhaps more emboldened to go back to or continue those QT plans?
Yeah, absolutely. You know what? If somebody said to me a couple of months ago that the UK market was going to set the tone for global asset prices, I wouldn't have believed it. But really, we have seen that over the last few weeks, right? Where we've seen the pound blow out, we've seen UK yields blow out, and that feeding through into wider markets. And that is something that I think, you know, if we can see some calm restored as a result of more liquidity in UK markets, I think that will definitely play, you know, well for asset prices broadly and embolden the Fed. So I buy that argument.
Eddie, what do you think? I mean, looking at commodities and pulling in crypto to that, what do you think of the lack of volatility that we've seen in Bitcoin? It continues to hover around $19,000. So it's like gilts can whipsaw the treasury market, but not do anything to Bitcoin.
Yeah, absolutely. Look, I think, crypto is still underlying, is still quite volatile compared to, say, the pound or something else. But look, I think we have always expected crypto to become less volatile as it matures, as it becomes ingrained in broader financial markets. So that is definitely something that we are seeing at the moment. And I think that is healthy for the crypto space. Some in the crypto space will be sorry because they will want that volatility, you know, because they love the trading activity. But I think, you know, I think it's good to see that signs of maturity. I do also think that if Bitcoin becomes more explosive to the upside, particularly in the next couple of years, that volatility returns.
How do you see the institutional involvement here? I mean, does it just continue to ramp up? Do they really build a base? Is that why we see, you know, this floor at 19,000 that seems fairly stable?
Look, I think I think institutional buyers do come in, I think, because they have the products now. There are some institutions that would like to buy, some hedge funds that wouldn't have been comfortable to buy crypto outright. They can do it via ETFs, they can do it via futures markets now. Are they the ones providing a floor at 19,000? I'm not sure that they are, but I do think that if we see another leg up, you know, they will want to pile in via the ETF. So, you know, I think it's not exactly a double-edged sword, but I do think the institutions have made themselves a standing part of the crypto market.
And do crypto traders, well, what do they do when volatility disappears then, Eddie? Are there other strategies available other than go buy pounds and gilts?
Right, exactly, which is exactly the strategy I was going to suggest. Look, there are. I think when you trade cryptocurrencies and you buy them outright, buy and hold, then I think, you know, it's the volatility, die down in volatility is one thing. If you're willing to trade derivatives, then it's another thing. I think, and also some of the smaller cryptocurrencies offer them a lot more opportunities to play that volatility.
Eddie, thanks so much for joining us. Eddie Vanderwalt there of Bloomberg Market Live. The blog MLIV Go on your terminal is what you type to get that and follow along with all of the market moves throughout the day. Tune in, by the way, to Bloomberg Crypto. That's every Tuesday on Bloomberg Television, 1 p.m. New York time, 6 p.m. in London, our weekly show that covers the people, transactions, and technology shaping the world of decentralized finance. This is Bloomberg.
Stronger that moment that you're lifting the barbell. You get stronger as your body is making repairs, making recovery. Recovery is a when and how you get fitter, faster, stronger.
Recovery technology includes everything from massage guns and foam rollers to compression boots, hyperbaric chambers, cryo chambers, infrared saunas, and even infrared pajamas. And athletes are partnering to become investors to take those products mainstream.
When you look at tech and sports right now, it's completely innovating the way training's going, completely changing the way recovery's going. I think sky's the limit as far as where it can go.
But while some of these products can feel amazing, it can be difficult to differentiate between what really helps the body and what just tricks the mind.
Every time you're chasing the latest, greatest, newest tool, you're probably chasing a mirage.
The last few years has been a challenging business environment with COVID, with supply restrictions, and of course also the war in Ukraine that drives energy prices. If you couple that with interest rates, the economy might cool down, but we've always had these cycles and we have gone through the cycles. If you have a resilient brand like Mercedes-Benz with a very loyal customer base, I think we're going to be prepared for whatever may come. Europe in particular will be challenged in the next 2, maybe 3 years. And we're working on fixing that, especially Germany that's been dependent on gas coming from Russia. So there's a lot of activity to deal with this short to mid-term challenge. But if we go and look a little bit longer, mid to long term, I think this may even be a catalyst to go quicker into renewables.
That was the CEO of Mercedes-Benz speaking with Bloomberg's Caroline Conan at the Paris Car Show. I think really interesting because this is one company that is dead set on going 100% electric. You've heard that from Ola a number of times, and the EQE is just one more piece of that puzzle. They're also dead set on trying to replace gas or fossil fuels in terms of their electricity, right? They signed up with a company to get to tap a wind farm in the Baltic Sea. They are building their own new wind farm at the Papenburg test track. So it's really interesting that they're looking for a way to make up these shortfalls. They're very proactive.
Yeah, absolutely. I was going to say, it seems that the energy story is all over this business at the moment, both the energy used by their customers to power their vehicles and also the energy that they use themselves to make the cars in the first place. Interesting on supply chains, as we look ahead to earnings season, we're still getting the car sector at that Paris Air Show then, Matt, talking about the difficulties in supply chains. Yes, things are getting better, but delays still there, elevated prices for chips.
Yeah, absolutely. I mean, the chip problem is not yet solved. Even though we see chip makers with a glut of PC chips, they still don't have enough, or they're not delivering enough chips to be used in cars. And we could see that combined with the energy crisis bringing down production in Europe. S&P Global recently put out a report that said by 1 million vehicles a quarter. Let's get a look at what's ahead today. At the top of the next hour, the new UK Chancellor Jeremy Hunt is expected to make a fiscal statement or a statement on his fiscal policy. We'll get earnings from Bank of America today, as well as a number of others. Goldman Sachs coming out around 7:30. Tech earnings also getting underway with Netflix and Tesla reporting results. And then if today is not enough for you, on Wednesday we're going to get UK and Euro area inflation data. Then Neil Kashkari, Charles Evans, Jim Bullard, all among the Fed speakers set to give us more indications this week of their policy inclinations. Go ahead and type Fed Go on your Bloomberg terminal for more details there. Let's get back to Goldman Sachs embarking on its third major reorg in just 4 years. The bank reports third quarter results. Wait, is it tomorrow? Is it? Finance reporter Charlie Wells joins us right now. Charlie, I know there's a ton of banks coming out. Is Goldman Sachs tomorrow?
Goldman Sachs is tomorrow, and Goldman Sachs also knows that it needs to find a way to generate fees in any environment. Now, this is a bank that is the epitome of Wall Street. It has a sterling reputation when it comes to investment banking and trading. Those units perform exceptionally well when the market is up, but when the market is down like now, the story is incredibly difficult and different. So CEO David Solomon has been looking for ways to find more standardized fee sources. He thought he found a way forward with consumer banking. As Sridhar Natarajan here at Bloomberg has been breaking story after story, though, the bank has really been challenged in the consumer banking sector. And so, you know, David Solomon moonlights as a DJ. He knows that people like remixes, but 3 and 4 years, that might be too many.
Okay, nice. I see what you did there. Very good, very good. Of course, Bank of America reporting in just a few minutes there, and we had lots of banks reporting on Friday, and we learned a lot, didn't we, about, you know, what a tough time this is for banks that focus on Wall Street, and a better time. And thank you, Jerome Powell, for the higher interest rates for those that operate on Main Street.
Yeah, so the news from Friday could actually bode particularly well for Bank of America. So what we saw and what really stuck out was JP Morgan reporting its best ever net interest income for a quarter. So we know that Bank of America looks a little bit more similar to, say, JP Morgan than a Goldman Sachs. Net interest income there is expected to be about $13.6 billion. That's up $1 billion from the previous quarter and a significant improvement from the year before. So it's looking like there could be good news. Of course, Brian Moynihan, the CEO of Bank of America, even going around last week saying he had faith in the strength of the American consumer. So how strong is that American consumer, and how long will that strength last? I think that's the question we need to be asking ourselves as well.
Yeah, I was going to ask you, what are you looking for specifically in the outlooks, Charlie? And I guess loan demand and consumer spending are the kind of indications we want to get a picture of.
Huge focus on those. I think what will be really interesting is to look at Bank of America's mortgage unit, right? So, you know, mortgage strength has been, you know, pretty good overall over the past year, but the housing market is cooling. That's something that I really want to focus on with Bank of America. If we think about Goldman, I think one position that I'm really struck by is the potential 54% decline in fees from banking. And so when you look at numbers like that, when you look at revenue expected to be down 16% compared with last year, it's no wonder that we're talking talking about something of a restructure for that bank, and especially when you compare it to its peers like JP Morgan and Bank of America.
Okay, Charlie, thanks so much. Bloomberg's Charlie Wells with the latest on the banking sector. Stay tuned for more on that, of course, this week. Matt, let's briefly mention a couple of lines coming through on the UK story. The Bank of England planning to resume sales of corporate bonds next week. Of course, this was part of the QT program that was only really just starting at the Bank of England when the politics overtook monetary policy and the unwind. Well, yeah, and they had to introduce, very targeted, they would probably say, bond buying at the long end of the gilt curve to support the pensions industry and some of the hedging products that were in place, or at least give them time to unwind that positioning. But you're right, they had to briefly do something else, and now it seems they are attempting, at least, to go back to it. So corporate bond sales, that program will resume next week.
And then, I guess, in just a few minutes, we hear more details from, is it fair to say, the new leader of the UK?
Well, that would be controversial. The UK government would say, no, not so. I mean, maybe the market is the new leader of the UK. Certainly the market putting UK policies back in their box and unwinding certain UK policies around that so-called mini-budget turns out to have a more maxi effect on UK assets, as we know. Gilt yields have been coming down as we expect further U-turns from the UK government, waiting to see what Jeremy Hunt, the new Chancellor, delivers. He's going to be speaking in just a few minutes' time. We'll bring you that, of course. This is Bloomberg.
Should we anticipate that you will have regulations clarifying what the SEC is going to do on cryptocurrencies and related kinds of things in the near future?
It's pretty clear that many of these tokens may be securities. What we've asked the trading platforms, the lending platforms, the other various venues to come in, to work with us, to get registered under the securities laws, because if a platform has 50 or some of them 500 tokens on their platform, probabilities are they're not all non-securities.
Now, there's another issue that has arisen, which is called gamification, which is to say people are making a game out of trying to buy stocks. Are you worried about this phenomenon?
We live in the 2020s in a new digital age where applications on our phones can use massive amount of data and then predict our behavior. What do we do when the digital algorithms are maximizing for the company's revenues rather than our returns? And so we're trying to think that through. It's not just gamification, it's a little bit more than that. It's whether there's a conflict between the app and our investment returns.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. Welcome to Bloomberg Crypto.
You have
have a situation in the UK where I'd call it a crisis of confidence.
Fiscal and monetary policy appeared to be moving in completely opposite directions.
The Bank of England is having to try and manage the chaos that the government has been creating in the bond market.
The bond market vigilantes are back.
What we've had in the UK really is symptomatic of what is happening elsewhere.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Here we go again, live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow with equity futures, TK, up a little more than 1%.
Yeah, you're going to say same week, same whatever.
I wasn't going to say anything like that, TK.
That wasn't going to work out, particularly on Bloomberg Radio worldwide. What an extraordinary week. And John, we start up with the same surprise. We've had all the news in the United Kingdom, and you can brief us on it. You know it better than me. John, to me, all I need to know is I got restriction on the screen. The Bloomberg Financial Conditions Index is where it's been every moment except the beginning of COVID.
It's super volatile last week. Kit Dukes of SocGen on the UK this morning. Lisa, you'll love this line too. Goodbye crisis, hello recession. The vigilantes win. We hear from the Chancellor a little bit later this morning.
So we talked about this last week. Who blinks? It is, of course, the blinking of the fiscal policy makers with a new regime. Jeremy Hunt going to be speaking today. We'll go through all of that. But the key question is, what can he do to really restore credibility for this administration at a time when there still is a huge risk premium baked into both the gilt market as well as the pound?
And dare I say, on a technical basis, Mike Wilson and Morgan Stanley almost on the edge of constructive this morning, guys. Lisa, just almost there.
Technically is sort of the key word. I mean, basically he's saying like, yeah, things could look good, and then they're going to look really, really bad. He's basically saying there could be a 16% rally, and then you look at the downside, and it's pretty dire.
Until companies fully confess or a recession officially arrives. Bank of America, Tom, later this hour.
Yeah, some of the research notes are really, really interesting. And John is staggered on November 2nd. What I would say, and this comes off the Washington meetings, is everybody in America is focused on the inflation story, the recession story, and that. The rest of the world's focused on dollar liquidity and the shortage of dollars out there. And you see it deep in the Bloomberg screen. There's a tension on a Monday morning that wasn't there a week ago.
Let's whip through the price action just briefly for you this Monday morning and start with the equity market. We are elevated on the S&P 500. Futures higher by a little more than 1 full percentage point. The volatility yesterday, just absolutely ridiculous, or rather on Friday. The volatility in the football yesterday, quite incredible, Tom. Did you catch City Liverpool?
I saw it, and you know, I can't translate it, but the Liverpool defense was world-class.
Virgil van Dijk finally had a good game.
Yes.
Stepped up. We'll touch on that later. Yeah. Yields come in 6 or 7 basis points on a 10-year. 394.87. We can discuss them later. Euro stronger, euro dollar 97.50, and crude Bramo 85.77, up by a little more than a 1/10 of 1%. Call it 0.2 of 1% higher.
Yeah, thanks so much. So what I'm looking at right now, of course, 8:30 a.m., we get some economic data. But before then, we're looking at Jeremy Hunt and what could potentially happen when he starts speaking in about a half an hour time. And then again to the House of Commons at around 10:30 Eastern. What does he say to give some support? There had been a lot of discussion over the weekend, different talk shows, and he had been pretty encouraging. We are seeing a bit of a dip in yields across all maturities. Is it enough? If you take a look at how we've performed year to date, yields are still incredibly high, and the pound is still incredibly low relative to the dollar, incredibly weak, even though you have seen a bit of a bounce on the heels of this. Then we do get some more earnings. Bank of America earnings out around 6:45 a.m., 8:30 a.m. We get the earnings call. Do they give the same kind of constructive feel that we heard from JP Morgan, or do they give more of a sense of the consumer a little bit more strained? I mean, we're not seeing that yet. Right now, Bank of America shares up 2.5% in the pre-market. And 8:30 a.m., we get U.S. October manufacturing data, as well as what we're getting with the Empire manufacturing. How much do we get a sense of a deceleration, a rapid deceleration in inflation and in activity at a time when this really is a tea leaf that is probably the first real data that we get out of October? The City Economic Surprise Index, John, this is interesting to me. It's been trending upward. We've actually seen positive surprises. Is that a good thing or a bad thing for economists that want to see this economy roll over sooner so the Fed doesn't have to do quite as much?
Did you see Mitch on Friday?
Yeah, that was concerning.
There you go. The chairman of the Federal Reserve says to look at it, Tom, so we look at it. University of Michigan, 1-year consumer inflation expectations, 5.1%.
Unanchored.
On the lift.
On the lift here, and this is these words that float around, credibility and the idea of anchored, unanchored. There's 14 flavors, there's 14 different opinions. I'm not going to lean on it other than to say usually I ignore University of Michigan, and I understand right now it's got a value.
Laurie Cavacina joins us now, the head of US equity strategy at RBC Capital Markets. Laurie, it wasn't about 3Q earnings, it was about guidance for 4Q and beyond. What are we learning so far?
So look, I think if so far in reporting season, John, I've been a little bit disappointed that it sounded a lot like the last couple reporting seasons. So we're hearing things like the tone around labor is improving a little bit, not seeing any major cracks yet in terms of either the consumer or demand, but companies are battening down the hatches and getting ready for choppier times. So at least there's that. But I think that in terms of, if you wanted the earnings Band-Aid ripped off, and that's what a lot of investors have been telling me, so far what I'm hearing is I don't know if we're going to get it this reporting season. I think we may have to wait till, February, March to get that.
Laura, you and Ben Laidler are on the same page. Ben Laidler starts out by saying the first ever so slight glance here at earnings are a less bad start. And then you talk about moving to high quality. Define what high quality is a comfortable place to be.
So high quality is a factor discussion that I have with a lot of investors. If you talk to your average portfolio manager, small cap or large cap, especially in the small cap space, odds are they've done some sort of back test that tells them that things like positive earnings and high ROE outperform over time. So come invest with me because that's the kind of portfolio I run. And so what we're starting to see is that after a summer in which the low quality stats, so negative earners, highly shorted names, negative ROE, low ROE, those names were actually working pretty well coming off the June low on a relative basis. And what we're seeing now is that more of the high quality versions, so the positive earners, the high ROE, the lowly shorted names are starting to work, which frankly, Tom, is a silver lining heading into the end of the year because that actually bodes well for active manager performance.
To me, Laurie, this goes to the risk-free rate returning here, and maybe it has to do with big combinations like Kroger and Albertson, but all of a sudden the zombies have to report. As what we're really talking about here is not high quality, but that all of a sudden it's zombie November.
I think that's a fair way to look at it, Tom. But, I would also say it depends on your definition of zombie a little bit. I think that in general, when you're going into sort of a lower growth, uncertain time, investors do cling to those higher quality names. And typically those are the ones that do come through, manage through challenging situations a little bit better. So I think that, investors are sort of circling up, closing the ranks, and really just clinging to what's worked over time. And as a lot of PMs say to me, you're not going to get beaten up by sticking to your philosophy. Where you are going to get beaten up is if you underperform when you've deviated from your philosophy.
Laurie, how much could you see the S&P getting to that 3,200 level, which is the base case for Mike Wilson over at Morgan Stanley, even with some of the constructive feel that you have in select names, in select industries?
So I think it's a great question, Lisa, and I understand why that number is important. When I talk to my friends in the technical strategy community, they'll often say 3,500, 3,200 are kind of the next big battlegrounds. And I see that as well from a fundamental perspective. 3,500 is your median recession drawdown, a 27% drawdown from peak. But if the market starts to think that the Fed is not going to be able to pull that off and that we're going to price in something more challenging from an economic perspective, an average drawdown is about 32% in a recession going back to the 30s, and that takes you to that 3,200 mark. And if you go back to the pandemic, Lisa, we lost 34% peak to trough. And so I think that 3,200 mark, if 35 doesn't hold, I think 3,200 is the next natural place to go. But it's hard for me to imagine we go too much lower than that, just because in the face of the pandemic, frankly, when life was on the line and there was just a massive uncertainty ahead of investors, that's only as bad as the market fell. So I think 3,200 is a good place to look if 3,500 doesn't hold, but 3,500 is proving to be a major battleground here for good reason.
Well, Laurie, how hard is it to convince some of your clients to be optimistic, to be constructive, when there is this high likelihood of that psychological level on the index?
I think that what's interesting is I talk to people about it from a positioning perspective. What is the next big thing that you need to do? And I show them my charts basically showing that defensives are at peak valuation relative to both cyclicals and secular growth. And I tell them, I've been traveling around the country pretty nonstop since June. And I tell them, everyone I talk to has plenty of defense. They've cleaned up their portfolios. They own as much staples or utilities as they're ever going to own. The next thing to do is to go on offense. And that really resonates with a lot of people because they know from that experience over the summer, going back to the conversation with Tom about quality, when the low quality stuff started to move, that is not where they were positioned, and that's where they started to see some underperformance in their portfolio. So I think people understand that if you're a longer-term investor, eventually the tide will turn. And frankly, there's just not a lot people need to do anymore on the defensive side. They're already there.
Hey, Laurie, wonderful to catch up with you. Laurie Calvasina there on the latest in this market from RBC. The latest from the UK, just getting this from the Chancellor. The measures announced today will raise 32 billion sterling, the UK to shorten universal energy support to April 2023. So the Chancellor in the UK just shortening the duration of the support they'll offer to offset some of the pain in energy to April 2023, to scrap the plan to cut income tax indefinitely. That from the Chancellor. More difficult decisions are coming on spending. So, Tom, this isn't just a U-turn. This is a massive change in terms of who is running the Treasury and what they're doing.
Sterling with a pop here, John, right away from a 112.50 to a 113.3. Nice pop. Breaking out to 114 would be a huge deal.
Reminds me of something Duke said this morning, Tom, when he said, goodbye crisis, hello recession. These kind of initiatives are arguably going to get us there quicker.
Because I was away, John, you and I barely talked. Wait, we barely talk anyways. But besides that, this guy ran the Olympics. What does it mean to you that the Chancellor of the Exchequer is the guy that did the very successful
didn't know that.
London Olympics?
Is that your piece of trivia this morning?
No, but it's not trivia. But to me, my God, that's got to be the toughest job going, to run an Olympics. See, he's like Mr. Organization, right?
Do you think he could run a marathon right now? The reason I asked that, Tom, is because
you're looking at me.
I wonder how long he'll be in the job.
You think that's funny, do you?
I do. I think that's funny.
Or how long this Prime Minister will be in the job. So for this Prime Minister right now, Tom, just seems to me, and Lisa, please weigh in, that this is the phrase we used on Friday, that you have a Prime Minister in office but not in power. And these headlines this morning kind of confirm that.
Yeah, a lot of people comparing her tenure to the shelf life of lettuce. That's one of the analogies.
You know, they're doing a race. I think one newspaper in the UK is doing a race. They've got a picture of her framed and a lettuce.
A trust countdown
to see what lasts longer. Steve Chevron in the next hour, 7 a.m. Eastern Time. Looking forward to that. Futures up on the S&P by more than 1%. From New York City, Guy Johnson out of London coming up shortly. This is Bloomberg.
Up to date with news from around the world with the First Word News. I'm Leanne Gerrans. Ukraine's government says Russia has launched kamikaze drones this morning. The explosions hit the center of Kyiv, damaging several residential homes. It is the second strike on the capital in a week. In Luxembourg, European Union foreign ministers are due to agree on the launch of a new mission to train around 15,000 Ukrainian personnel in the EU and sign off on an additional $487 million in weapons financing. Now, EU nations have agreed to a new package of sanctions on Iran over human rights violations relating to the death of a young Iranian woman who died in police custody after allegedly flouting strict Islamic dress codes. Austria's foreign minister says the package targets 11 Iranian people and 4 entities responsible for serious human rights violations. Last month, deadly protests erupted in Iran in response to the woman's death. Mercedes is broadening its battery-powered lineup with a new sports utility vehicle. The aim is to take on Tesla's Model Y, the car maker's latest step to go all-electric by the end of the decade. The EQE SUV is the 4th model to use Mercedes' dedicated EV platform. Now, we did speak to the CEO, who says the energy crisis may hasten the move in renewables.
Europe in particular will be challenged in the next 2, maybe 3 years. We're working on fixing that, especially Germany that's been dependent on gas coming from Russia. So there's a lot of activity to deal with this short to mid-term challenge. But if we go and look a little bit longer, mid to long term, I think this may even be a catalyst to go quicker into renewables.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
going to name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but you know, some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
When U.S. inflation numbers are released,
the score is inflation won, Fed nothing today.
Bloomberg brings you crucial data at terminal speed.
Core CPI in America, 40-year high.
Yields are absolutely flying.
Equities down and down hard.
It's ugly.
And instant expert analysis.
What is the makeup of this inflation?
We are watching the underlying fundamentals. Will they go 100 basis points?
The downshift just keeps getting pushed out. Now it looks like we're going into extra innings.
Nobody covers the economy like Bloomberg, your global business authority. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night. I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
We will not hesitate to raise interest rates to meet the inflation target. And as things stand today, my best guess is that inflationary pressures will require a stronger response than we perhaps thought in August.
Governor Bailey teeing up the next decision from the Bank of England in early November, live from New York City this morning. Good morning. Here's the price action for you when the S&P 500 elevated and kicking higher on the S&P, bouncing back again this morning by 1.29%. Yields heading south lower, negative 9 basis points on a 10-year, 393. And sterling, a 113 handle again. Cable, the pound against the US dollar, 113.04, positive by a little more than 1%. And I wouldn't just call this a U-turn. This goes beyond that, Tom Keane, from the new Chancellor, Mr. Hunt, over in London, making plans to reverse pretty much everything and shorten the energy support program from 2 years down to just through April 2023.
The Bloomberg Financial Conditions Index for the United Kingdom, John, is absolutely original. It shows the bizarreness of the moment. And I think we've just got to dive into it. I'm going to do it on the political end with Guy Johnson, joining us now in London, because John's a lot more up to speed on this than I am. Guy, can you explain the politics here? Is the Chancellor of the Exchequer running for office?
Yes.
That's not a radio answer, Guy. We got to do better than that. It doesn't work on Bloomberg Radio. He's running for office.
Yeah, they're all running for office. It is open season. Everybody is now running for office in the UK. Penny Mordaunt's running for office, Rishi Sunak's running for office, Jeremy Hunt is running for office. It is open season on Liz Truss. The real problem here, Tom, and I'm joking with you because it is amazing to watch and I can't quite believe my eyes, but I find myself in a situation where I actually struggle to wonder whether or not they can make it stick, though. Because here's the problem. Can you change leaders again without a general election? Can you credibly do that? And I think that is going to be a question that increasingly becomes relevant as the days progress. We have a relatively positive outcome from the markets this morning. That will buy Liz Truss, Jeremy Hunt until the 31st. If things calm down beyond then, maybe this kind of atmosphere calms down and actually there is a view taken that she can survive a little bit longer than that. We've got around 2.5 years until the next general election. The Tory MPs are not going to want to bring that forward. If the chaos continues, yes, she's definitely gone. And that certainly looks like the base case at the moment. But I wouldn't rule out her remaining either. I think Liz Truss is running for Prime Minister as well at the moment.
Guy, let's get to November 3rd and this Bank of England. Go through the policies that have just been announced and walk us through what this is going to mean for Governor Bailey when he sits down with the team in a few weeks' time.
Okay, let's look at pricing this morning, John. So the front end's come down, let's call it circa 50 basis points. So we're back, I've been talking to Ben Rom about this morning from MLive. We're basically back down to, let's call it circa 100 bips for the next meeting. So that's kind of where we were pre-mini budget. So we've priced out quite a lot, and the front end basically has moved down in yield quite aggressively, but probably doesn't go any further. The market is still pricing a terminal rate of 5 to 5.5%, 6%. So we've still got a long way to go on the front end. So this looks like a sort of tactical rally here this morning. But the base case is still that the Bank of England has to do a lot. It probably just isn't pricing the very aggressive move that it potentially would have had to announce were this chaos to have had to continue, and we hadn't had basically a large reversal on the unfunded budget, John. So that is kind of where we are. I'm just looking at the Bloomberg now. Less than 175 bips of BOE hikes now priced by year end versus 280 only a few days ago. So that's the kind of the move we're seeing. But whether it goes any further, particularly at the front end, looks doubtful at this kind of stage, this kind of level at this stage, John.
Guy, given the fact that you're talking about everyone under the sun running for office and that this is open season, there's a question about the credibility of Jeremy Hunt at this point as he basically undoes everything that Liz Truss put out there as her platform. How much credibility is there in the markets and by other policymakers that this will stick, that this is truly going to be the policy going forward?
I think this probably will stick, Lisa, and the reason for it sticking is the market reaction. The market, they're terrified of the markets down in Westminster once again. Westminster is terrified of the city. That is now what is happening. So you get a positive reaction, probably is a tick in the box for this policy. He's maybe gone a little bit further than some had anticipated in certain in certain areas, and he is indicating that there are further painful cuts still to come. It looks like he's going to shorten up the duration of the energy relief package. That's going to happen. We've already heard the announcements on corporation tax and some of the other taxes that we're going to change. I would say that this is now looking like it is the policy. The policy of this sort of dash for growth that Kwarteng and Truss put forward has been completely reversed. We talked on Friday about the fact that we wanted, the UK needed a more sensible approach. Given the market reaction that we saw before and afterwards, this new policy will be seen as the more sensible.
Hey, Guy, looking forward to catching up a little bit later. Guy Johnson out of London on Chancellor Hunt's big U-turn and promising even more. I go back to that line from Kit Dukes of SocGen from earlier this morning. The title of his morning note, Goodbye Crisis, Hello Recession. The Vigilantes win. The Vigilantes, Tom Keane,
this is so important, and it's not the cliche of the edge of dinner, you know, the bond vigilantes.
Sure.
It's the equity, bond, currency, and commodity vigilantes. And I'd really look off the messaging in Washington that I heard, particularly off mic, at the currency vigilantes, what we're going to do about those available to swap lines and those that are not available. And you wonder where the United Kingdom fits in there.
The president of the United States weighing in on the situation in the UK as well, Tom. They've not been scared of doing that, saying that the plan to cut taxes on the wealthy was not a good idea, and he wasn't the only person who said it was wrong.
Yeah, I'll go with that. I just did some math here on the Bloomberg Financial Conditions Index, and the United States, as a general statement back 20 years, is more restrictive right now than Governor Bailey. I don't know what to make of that.
Can I just throw this in there on tax policy in the UK versus the US? The top bracket here, 37% for federal income tax. When do you start paying that? 540 in and around 540,000. Do you know when you start to pay 40% in the UK? 50,000 sterling. 50,000 sterling. I'm not sure the President of the United States is in the greatest position to talk about how much the wealthy is paying in taxes. It's a highly progressive tax code in the United States, and it's something that social democrats in the United States don't really communicate to the electorate very well. The European model is based on getting many more people to pay a lot more in taxes,
yes,
and not just
in France particularly.
Not just the upper echelons of society. That's a major difference that is just not discussed on this side of the Atlantic.
I think it's true, and it's again the shift from my youth over to where we are now. And that, as you say, it's much more progressive. And of course, the Trump tax cuts, whatever anybody thinks of the politics, they were popular.
Ibrahim Rakbari is going to join us very shortly on Citi and the, what do you call them, the FX vigilantes?
The FX, this is my major message from IMF World Bank. The FX vigilantes are out there with a vengeance. Look at yen this morning. We haven't even talked about it. 148.67.
The other thing the president said, Lisa, I'm not worried about the dollar, I'm worried about the rest of the world, but the rest of the world is worried about the dollar.
Well, yeah, but the U.S. isn't worried about the dollar as much, and they don't really care as much about the rest of the world. So try to square that.
I'm pretty confused by that. Futures this morning on the S&P.
Confused?
Up by 1.2. I'm always confused. They got it done against the Dodgers, didn't they?
Stayed up,
I saw that. I saw that. It was a good game?
Phenomenal. Real baseball.
very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much the consumer is paying them. And so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value and the kind of transparency that they want.
Are you seeing a labor shortage right now? And what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about like going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
Business is you get to build things from nothing.
I don't have any investors. This is all money in. This is me just building it.
It's pretty much full service shadow banking with nobody in charge.
Live from New York City this morning. Good morning. Getting about this Monday morning on the S&P 500. Here's the price action for you on the S&P. Elevated futures pushing higher on the S&P and on the Nasdaq too, up by 1.35% on the Nasdaq 100. On the S&P 500 up by 1.2%. Snapshot of the Treasury market for you. 2s, 10s and 30s. Yields lower by 8 basis points on a 10-year. 393.85 through 450 on a 2-year last week. What a move that was. We backtracked. We're down 5 or 6 basis points to 443.90 on the week last week. 2-year yields climbing for 6 straight weeks. Your 10-year yield climbing for maybe even 11. Can you get your head around that? 11 weeks? 11 weeks
no, that
10-year yields have been climbing?
I can't get my head around this. And Lisa, help me here quickly with the mortgage. 30-year mortgage rate, I can't get my head around it.
Yeah, 6.9%, I think, of the average. And it comes because you are seeing this expectation. Jim Bullard, we haven't mentioned this yet, over the weekend was talking about the likelihood of a 4.75% Fed funds rate by the end of this year, that he sees that as a possibility. That is a game changer for someone who really has been out front in many
So
ways.
the conversation he teed up, which was interesting, is that you use the December decision to bring in what you want to do in 23.
Agreed.
Perhaps into
Front-loaded.
December. We'll see. We've got a lot of data between now and then. Got a lot of headlines to throw into the UK market for you as well. Look at gilts, look at sterling. Yields come down by 38 basis points on a UK 30-year, down 36 on a UK 10-year. These are truly historic moves in the gilt market off the back of a couple of headlines from the Chancellor, several. They're backtracking on pretty much all of the tax cut plans. The support they were going to offer individuals for offsetting some of the pain in the energy market. They're going to tighten up the duration of that support as well. And ultimately, Tom, what they're communicating is there's more to come. There's more to come.
Absolutely. And the standard deviation study was at agonizing 7 standard deviation, and we're now down to about 2.5 standard deviation. Still tension there, but nothing like what we saw. The research piece of the weekend in foreign exchange, Ibrahim Rabari wrote it. He is global head of FX analysis at Citigroup. We're thrilled he could join us after his attendance in Washington. Ibrahim, what I noticed in Washington is little focus on central banks and maximum focus on dollar liquidity among the flush countries and the ones more challenged. How critical is a dollar shortage worldwide?
Well, I would say the dollar was the talk of the town in Washington, but the message that we came away with was actually a little bit different. We did come away with thinking the Fed is still the central focus. And when it comes to the dollar, there's a lot of concern, but really the sense there isn't very much that could be done about it unless the Fed was going to veer off its unique focus on inflation at present. And when it comes to foreign exchange markets, as much of a concern as they are, right now they seem to be operating in a relatively orderly way. So yes, FX funding markets have started to show some signs of concern, but we're not nearly at a point where policy interventions are likely to be imminent.
I've got to go to the immediate, Ibrahim. What does the Bank of Japan, the Ministry of Finance do in Japan with their unique experience? What is the reality of a second intervention's efficacy after a failed first intervention?
Well, we expect more of the same. So we think that second intervention is going to come likely very soon, could be as early as today. And we saw the rhetoric ramp up late on Friday. And at the same time, we got Governor Kuroda reassert that Japan was different, that more monetary easing was required to bring inflation back up. So we see no reason for the efficacy to change in the Japanese case. And therefore, we do think that just as in the first case, dollar-yen would come down once you see those signs of intervention, and then it would creep right back up as U.S. rates go back up.
Well, Ibrahim, some people say it's not a failed intervention the first time around. Their goal was simply to slow the pace of the depreciation of the yen versus the dollar. If that's the case, where is the new red line in the sand, this idea of when they will get really concerned and have to rethink a whole host of issues? Is it 150? Is it 160? Is it 180?
So I have sympathy with that statement. So we think there is no clearly defined red line, but if there is one, it's probably defined by the politics or when inflation starts to credibly be above 2%. And that is certainly north of 160 on that latter criterion. We don't think the politics will probably become acute before then. So it's quite a long way away from here. And until then, Prime Minister Kishida in New York said himself that it was dollar-yen moving 30 handles in a year, 2 handles in a day that was raising his concern. So it was about the pace of appreciation in dollar-yen, not the level. So we don't see a line in the sand anywhere close to the current level.
So perhaps that's the future crisis. The current crisis, or perhaps it's been somewhat averted, is in the United Kingdom, where we're going to be hearing from Jeremy Hunt a couple of times throughout the day, trying to stave off some of the pain that we saw over the past few weeks of volatility. How much credence do you give to this idea of foreign investors coming back to the UK at a time when the bond vigilantes, if they won, that means a sooner and potentially deeper recession?
So we think the bar for foreign investors to return to the UK en masse is very high. And at the heart of that, I would quote what we think are probably the two most relevant statistics: an 8% current account deficit, which I think reflects some of the broader challenges the UK is facing, and real interest rates that are still just about negative, and certainly 1 to 2% below those in the US. So I think in that kind of environment, the bar for foreign investors to see major appeal in the UK is incredibly high.
It was something, Ibrahim, to talk to Raghavan Rajan, Abu School, the former leader of the Indian Central Bank, about the flow realities of emerging markets. Is it like the 90s for emerging markets right now?
Well, I would say there's a lot of optimism, maybe a touch of complacency when it comes to the large emerging markets at present. And if you take foreign exchange as an example, the appreciation of the dollar has been much more extensive against developed markets than it's been against emerging markets. So at present, we see more concern about frontier markets, a lot less about the emerging markets. But one of the issues I'm concerned with is that could change, that maybe there is a bit too much complacency, that the large emerging markets are in a better position on the balance sheet side, economically, to some degree, even for inflation. So we're concerned, but the base case is that maybe we have to watch some of the developed markets, like the UK, a bit more closely than.
There's all this macro babble, Ibrahim. Where's a trade I can make money on into Q4? I mean, forget about the IMF 60,000 feet stuff. Where can I make some money in the next 90 days?
So we think it's more of the same. So that pattern of higher global interest rates, lower equity prices, and a stronger dollar, we think will continue into year end. And there are these balance sheet pressures that make that even more likely. So in foreign exchange, we see further dollar upside against, in particular, the risky foreign currencies. So, for example, continuing to be short the Australian dollar against the US dollar, we think has promise into the end of the year.
Just to be clear, to elaborate a little bit on that point, is the faith in a stronger dollar from here predicated on this idea that the Federal Reserve is going to raise rates close to 5% by early next year, or is it predicated on the idea that the economic data coming in will continue to be strong, and that is the reason for these rate hikes, that really it's the resilience of the economy rather than the rate hikes themselves?
The two are related, but I would put more weight on the Fed and those rate hikes, and that is because they do reflect to some degree the economic outperformance of the US. But the central driver of dollar strength has been the decline in asset prices around the world, and for that, Fed interest rates and US real rates are the primary driver. So both matter, but it is more about the Fed right now than about US growth.
Hey, Ibrahim. Always wonderful to hear from you, sir. Ibrahim Ragbari there of Citi. The range that we've had on sterling on cable over the last few weeks has just been phenomenal. 103.50 at the lows on cable. That was back on September 25th. And this morning, Tom, briefly back through 113, right now 112.70.
Yeah, and again, that frames it out that we're not back. I haven't done a study of where it breaks out, 118, 120. I don't know where it is, but we're nowhere near that word reversal. And I think that's evident across every feature of this debate.
Let's see what we get from the Bank of England and Governor Bailey a little bit later in November 3rd. There was talk of 100 basis points, 125. With this budget, does he have to go as fast as people thought he did just weeks ago?
The market is saying no. The market right now is pricing in a slower pace of rate hikes. But Andrew Bailey has underwhelmed the market at several consecutive Bank of England meetings in terms of how far he went. And will he have to do better than that this time around? Because you could say that we staved off, or we got a cap on how high yields could go, or how low, or a floor for how low the pound could go. Still, though, as you point out, the levels are a far cry from what they were just weeks ago. And the risk premium built in for some of this uncertainty, as you pointed out yesterday, is going to be something that stays around for a bit longer.
How deep are the scars in sterling assets? There's one dimension, one aspect of this announcement from the Chancellor that jumps out to me that I think at some point we'll have to revisit. In fact, we know we will. April 2023 is when the support for the energy situation will end. And I wonder if you have to revisit again that Tom, going
Yeah,
into
that's
next
in there.
winter.
That's a really important point. And
Is this a
do you
single
extend-
winter issue?
Exactly, and you've been good on this. Am I right, John, that in a lot of Europe, they're already looking at it as a two-winter
Well,
issue?
the original plan was a couple of years, so we were already planning for, say, 2 years of this.
But
in the
London's
UK.
really not doing that.
Not now. They've
Okay.
reversed that plan. And in Europe, I think we're all starting to have that conversation in a much bigger way. Not one winter, maybe several.
And the problem is that how much investment can happen if the bond vigilantes are back? And I keep going back to this, and it's about Europe, but it's also the U.S., where suddenly, as we have 22 days till the midterm elections, Social Security and Medicare spending is a massive issue, because where do you get the money to spend on some of these issues, whether it's energy or anything else, at a time when the cost of financing is so high?
I can't think of the last time this happened, Tom. I'm thinking back maybe to the Eurozone crisis and pushing out Berlusconi in Italy when the markets basically forced the government to push people out and do something this big at a G7 economy.
Again, the sea change here is we're getting back to a risk-free rate. We're getting back to the G in gravity, as Taleb talks about. And this is when you have that, John. I mean, it's like Italy or it's like that. Can I talk about another restructuring this morning? We're going to talk about it later. Sri Natarajan to join us in the 8 o'clock hour. Goldman Sachs is on the edge of trust. Solomon is like doing a Liz Truss.
Pushing people out.
I don't know what's going on there, but this is a really big deal for global Wall Street in New York Wall Street. It's a Goldman Sachs do-over.
A reshuffle of individuals. What about a corporate restructure in terms of actually letting go of maybe initiatives that you have started and they're not going so well?
Below the radar, and Sri Natarajan is saying this should be above the radar. Is the Goldman Sachs Consumer Bank a failure?
Marcus?
You
can call it that if you want to. I'm not going there.
I don't know, it's a big deal.
I think we get Goldman numbers tomorrow, don't we?
Yes.
Bank of America numbers could be due any moment now. Coming up in a few minutes. Futures right now at 1% on the S&P. We're bouncing back from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. Newly appointed UK Chancellor of the Exchequer, Jeremy Hunt, set out plans to try to bring order to the UK's public finances and reassure markets after Liz Truss's economic programme triggered weeks of turmoil. He announced a further rollback on some of the tax cuts planned by Truss and a shortening of a planned universal energy support.
No government can control markets, but every government can give certainty about the sustainability of public finances. And that is one of the many factors that influence how markets behave. And for that reason, although the Prime Minister and I are both committed to cutting corporation tax, on Friday she listened to concerns about the mini-budget and confirmed we will not proceed with the cut to corporation tax announced.
Meanwhile, Hunt will address Parliament with more details later. Now, China told its state-owned gas importers to stop selling LNG to energy-starved buyers in Europe and Asia in order to ensure its own supply for the winter heating season. State-owned importers had been reselling LNG to Europe, offering some relief. Forecasters for a small gas supply deficit are likely to have spurred the move by Beijing. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
We think that's the next secular shift.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Whether the committee would want to pull some proposed or thought of policy rate increases from 2023 into the December meeting, I think that's a judgment it's premature to make.
The Fed ready to go again in November, perhaps by another 75 basis points. That was Jim Bullard of the St. Louis Fed. Are these banks making money from these rate hikes? Shonali Bassett joins us now for more. Shonali, Bank of America out just moments ago.
Moments ago, you do see the same thing we've been seeing at the other banks. You see a rise in net interest income above expectations, but you do see provisions for loan losses higher by about $150 million or so, more than Wall Street had expected. Very clean numbers here. They have clean trading figures relative to Wall Street's expectations, met on a beat on FICC, met on equities, reported 0 days of trading losses. That says value at risk is broadly rising across the industry and keeping expenses broadly in line. So let's see how Wall Street continues to react. They got a little jump in their shares on Friday after JP Morgan reported. Are these numbers enough to keep Wall Street happy?
We are seeing about a 2.4% gain pre-market trading from Bank of America. Shonali, from your perspective, what's the most notable aspect here? We talk about loan loss provisions not that much higher than what they had expected, right? And they really actually blew it out when it came to equity trading as well, which was unusual for the other banks.
Yeah, it is unusual. And then you look at what is going wrong in FICC, I would also say, because the question is roll forward. How much of an overhang will that be? They are starting to see some cracks in credit and mortgages. We've been talking about this. Is that going to start to hurt in future quarters? Really quickly here also, charge-offs from the prior quarter declined. So health of the consumer.
Very quickly, in their great PowerPoint, they get the best-in-class PowerPoint on the stuff. In consumer banking, they have 44% more Zelle transactions than written checks. I know, Shonali, you haven't written a check in 10 years. I'm still writing 10 a day out. Digital banking is the win here for these banks, isn't it?
It is the win, and it's also very political because are they keeping that branch headcount alive as they grow digitally? They're being asked this by lawmakers. And again, Jamie Dimon answered the question Friday. Are they going to increase those savings rates for consumers as they go along?
This is a huge issue, Shonali. Thank you so much. And we're going to speak now with one of the experts here on your future of banking, and this dovetails into J.P. Morgan and Bank of America. Thomas Michaud is Chief Executive Officer of KBW. Keith Breton-Woods, of course, was Stifel, and is absolutely definitive on the pulse of American banking, small, mid, super regional, super Michaud, and the big banks as well. Tom Michaud, when do they capitulate and realize the future is digital banking?
Well, that's happening right now, right in front of us. I think what was remarkable during the COVID period was how much digital engagement there was, and we've been watching very carefully to see if it would slip back after COVID thankfully came to an end. That hasn't happened. Digital engagement's up. We think it's gonna be good for consumers. It's gonna take friction out. Right. As well as the fact that it's going to help with expenses with these big banks and make them more profitable.
Tom, I know you're not involved in the Kroger-Albertsons deal. Maybe it's a little bit outside your remit, but there we are with finally a new risk-free rate. Finally, we've got the math back to what it was. Are there zombie banks to be merged?
We think consolidation will restart. Historically speaking, when things are disorderly is when consolidation in banking slows down. Stock prices have been very volatile, a lot of concern about the economy. My expectation is as soon as things settle down and get orderly again, we're going to see consolidation happen because scale is working in the banking industry, and a lot of it is what you talked about earlier, revolving around the ability to invest in technology. And that's one of the themes in this industry.
Tom Keene mentioned this whole question of consolidation and mergers and acquisitions. And I wonder about some of the debt, the financing for some of these acquisitions that were arranged earlier this year, the banks are still hanging on to. How concerned are you, based on the increase in loan loss provisions, in the sense that perhaps it's not all in there, about this being a potential risk in the future?
The reality is that asset marks, which is what you're talking about, which is what are the valuations of commitments that were made a while ago. Asset marks have been negative for the banking industry as they've been really across the board in finance. And so we would expect that there would be negative marks to things like that, as well as, frankly, to bond holdings that's been happening. And that's really one of the themes. That's why we think during this Bank of America conference call that's coming up, there's going to be a lot of talk about tangible capital and other capital ratios. And frankly, Bank of America, it was our expectation they were going to improve their capital ratios and be in a very strong position. So the reason why these banks have been carrying as much capital as they have, so they can withstand easily things like you just asked about loan marks. So we would expect there will be negative loan marks, but we also believe that the banking industry is well capitalized and can handle it.
Tom, right now we're seeing shares of Bank of America above 3% in pre-market trading. Who do you think is going to be the winner, and who do you think is going to be the loser of this earnings season?
The banks that have a lot of net interest income, it's almost like a continuum. If you've got a big investment banking operation, you're under pressure. Just so you know, our analysts are looking for down 55% in total across the board investment banking revenues for the third quarter, but only down 2% linked quarter. So it suggests to us the year-over-year pain is real. However, we think we're bouncing along a new level. If you're a regional bank, if you're one of the big super regionals, they're in the second quarter, we believe, of a 4-quarter run where they're going to show 20% year-over-year net interest income growth. That really has not happened in my career. And so it is very, very strong on the revenue side.
Hey, Tom, wonderful to hear from you, sir. It's good to catch up. Tom Michaud there of KBW, the stock up by 3.5%. What we're seeing, TK, from the banks in the last couple of days is the benefits from higher interest rates. What you're arguably going to see in the coming quarters is the harm done by higher interest rates when the economy starts to weaken and soften a whole lot more.
We're going to see that. And Bloomberg has a real heritage here of looking at FIC and looking at banking and all that. I'm looking at what you and I talked to Moynihan about in Davos, which is the grinding grind of consumer banking. And as Michaud just said here, I'm looking at double-digit loan growth, double-digit this, double-digit that. On the revenue side and the grinding consumer side, this is a constructive story.
And that's great because you get to pass on higher interest rates for business and consumer loans. Fantastic.
Well, somehow
news.
we'll survive
and you're
with
not
higher
passing
interest
that on
rates.
to the deposit base. Brilliant news. But what we're starting to see crack in the last week or so, and Shonali, you can speak to this, auto loan origination, mortgage origination. That's the side of things where you can start to see things punching the other way.
They sure do. And I also took a quick look at the presentation. You see credit card delinquency, 30 days overdue, ticking higher as well. And the credit card business is really where you're seeing a lot of these banks punch a lot higher in the net interest income and the loans that they're making there.
This is what's interesting about this moment, Tom. The banks are telling you kind of what we already knew. The economy's okay. In the third quarter, it was all right, but we're preparing because we think in the next couple of quarters, things are going to get worse.
We didn't go to Michaud on this, though, but with the Goldman Sachs restructuring, Natarajan wrote about today, you wonder about traditional banking, more of a Goldman Sachs-y kind of economy, is how much is the restructuring going to be into year-end?
Can you tell me what a Goldman Sachs-y kind of economy is?
Lack of consumer banking. I mean, they did Chanel, is Marcus a failed proposition this morning?
Listen, so much of this was about lowering Goldman's cost of funding and diversifying Goldman Sachs, but 60 to 70% still comes from IB and trading. What are you going to do?
Tom wants to know if Marcus is a failure. That's all he wants to know. Chanel's not going to go on the record, Tom, and tell you.
Absolutely not.
It's not happening.
Not happening.
Steve Chevron in the next hour of Federated Hermes. Steve might go there, TK. Futures on the S&P 500 up more than 1%. Live from New York. This is Bloomberg.
So is there more pressure when you're trying to win a basketball championship than when you're trying to please investors? Where's the greater pressure?
Oh, I think it's definitely trying to win a championship. It's hard because a lot of, like when you invest, and you know this, when you're investing, you can control a lot more things. When, you know, on a basketball court, you can't control whether somebody's going to make a shot. You've got to get lucky.
And what's the greater pleasure, making 5 times your money on a distressed debt investment or winning the NBA championship?
They're both fabulous. I wish I could do one each year. That would be great. But I think there's a great feeling in being right on an investment that you've done a tremendous amount of work and you've made money for your clients, which I think is great. I think winning a championship it's a very surreal feeling because there's a whole city or state that is actually behind you. You know, we had 70,000 people at the finals, and we had them all outside. You had 17,000 in the stands, and then literally like 60,000 people outside. And when we won, like just the joy that you had brought to the city was phenomenal.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question.
Great question.
Great question. That's going to be the best question I get all night. I'm glad you asked that.
Bloomberg Television. Top experts, great questions. Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer, like Marriott's Leni Oberg.
One of the most important things is looking around the corner.
Adrian Mitchell from Macy's.
We have to let go of the traditional legacy department store.
And Luca Zaramella at Mondelez.
We tend to believe that all consumers are equal. They are not.
Look for Chief Future Officer on Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
us is the Fed's going to continue to raise rates aggressively till they see the need to slow down.
I think the Fed is going to continue to be on this path for quite a few months.
I definitely think we'll see another 75 basis point move in November.
The more aggressive they get, the more you're going to bring recession fear as the primary fear over inflation.
Because of the Fed overdoing this, we're going to end up back where we were 10 years ago.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City this morning. Good morning, good morning. For our audience worldwide on TV and radio, this is Bloomberg Surveillance alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures up by more than 1%. TK, I've got to say, actually a pretty interesting session already this morning, particularly in foreign exchange.
Yeah, I thought we picked up right off the last number of weeks where you have to look not at equities, bonds, currencies, commodities, but the holistic whole. And you're right, foreign exchange is the litmus paper that we've got. Front and center is a yen running away, 148.85. All you need to know if you don't keep score on yen is that is troubling for the leadership of Japan.
Inching closer and closer to 150. I can tell you sterling breaking out a little bit earlier this morning as well. Cable, the pound against the US dollar, 112.79, call it 112.80. Lisa, briefly, or 113.
Basically, the market has won. And the power of the market right now. Who was it who said if they come back, they want to come back as the bond market after they die?
Mr. Carville.
Mr. Carville, how much is that what we're seeing right now? And how far can that go? Is it just United Kingdom, or does this go further at a time when suddenly there is a rate that people have to pay to borrow money?
So you've got the U-turn from the Chancellor on a range of tax cuts. He's also done something on energy. He's shortened the duration of the support that he will offer to the UK consumer. Javier blasts out on Twitter moments ago, bringing up a really important point, Tom, on this, and I think this is going to get a lot more attention. The UK government has admitted, in Javier's opinion, it does not have the money to subsidise energy consumption for everyone beyond 6 months. From April 23 onward, many voters will feel the pain of high gas and electricity prices. He goes on to say, Tom, it may be local politics, but it has implications for Ukraine.
Yeah, well, I'll go with that. And what really upsets me here is ex-China, where there's clearly a slowdown. Witness the GDP pause. Where would Brent crude be now if you had legitimate Asian demand? And the answer is the UK at 110,
on a different
120
planet.
Brent.
Coincidental that you think that they have the big meeting over in China and the third quarter GDP number is just delayed?
No, I don't think that was
kicked into the long grass for now.
Exactly. And basically, people are expecting, in general, the economy to come in with the slowest pace, one of the slowest paces ever. 3.3% is the economist's view for growth.
Well,
GDP
the first time I ever heard this was from Alarian. 3% GDP is a global recession. We're there.
Two-handle. We're talking about twos, Tom.
Yeah.
Now for 2023.
I didn't know that. Excuse me. I've been down at Martin's Tavern in Georgetown.
You weren't listening to what they actually had to say
on
the forecast.
French onion soup.
I bet you were. Futures right now on the S&P 500, spiked French onion soup. I'm sure that's delicious.
It is. It's best in Washington. It was there.
Up more than 1% on the S&P 500. Yields lower by 7 basis points. 394.46. Talked a lot about the 10-year climbing.
Are you used
for
to those
11
yields yet?
consecutive weeks. What's that,
I'm
Tom?
still not used to those yields. I look at them on the screen. It's like from another.
Hey, to see the front end, the 2-year through 450 last week, just up and away, Bramo.
I mean, honestly, and this again goes to this question of, is Jim Bullard really the new tea leaf on the Fed, saying that 4.75% could be the Fed funds rate as of the end of this year? We get more from Jeremy Hunt, the UK's new Chancellor of the Exchequer. He has already released his statement earlier, but he is going to speak with the House of Commons at 10:30 a.m. Eastern. How much more clarity do we get on some of these plans? Like what kind of triggers there could be to extend some of this aid, and how much, this is more prevalent, how much are they going to cut spending? Right now, we are seeing 30-year yields in the UK come down. You are seeing the pound strengthen. But really going forward, how much can you get strengthening in the pound when you are kind of guaranteeing a recession and now potentially a deep one if you don't have fiscal spending as a relief valve? We did get Bank of America earnings. We get the earnings call at about 8:30 a.m. How much can they speak to the forward look in terms of what kinds of credit cracks, what kinds of problems with delinquencies, what their threat threshold will be for lending at a time when possibly consumers will not have as much to repay their loans. And at 8:30 a.m., we get U.S. Empire Manufacturing going back to where are we in this cycle, right? People are expecting some sort of material slowdown in manufacturing. That it was the front of the inflation and the boom. Will it be in the front of the other side? What happens if it's not? Because we have seen, John, so many economic surprises to the upside, which really has been treated as bad news for a market concerned about a Fed.
Elisa, thank you. Brian Moynihan over at Bank of America on the economy, seeing a resilient consumer with cash to spare. The one thing that's jumped out for all of us, I think, over the last couple of days, Tom, pouring through the bank numbers, the provision for credit losses. So that's $898 million over at B of A for the third quarter. The estimate was 766.1. I think the direction of travel here, Tom, tells the story.
It's there, and it's always there when you have some form of slowdown in GDP, and we've got that slowdown in place. I think there is a caution or even a Brammo gloom element to the bank financial story. But the other side is the efficiency they're getting from digital banking. And as Michaud said earlier, Tom Michaud of KBW, a Stifel company, as Tom Michaud said as well.
What's that about? Why is everything a Stifel company these days?
I don't know. It's like Bloomberg surveillance, a Faro company.
A Faro company?
It's like, you know,
I think Mike might take issue with that, Tom.
Right.
Steve Chevrolet joins us now, head of multi-asset solutions at Federated Hermes. Steve, we've had some earnings over the last couple of weeks. I'd love your response to them. What takes your eye? What catches your eye?
Yeah, look, I think you guys are touching on it. It's a consumer that's still relatively strong, but with risk ahead on the credit side. And I think that's what we're seeing. This cycle is being defined not by its severity, but by its duration. And what you're seeing is that despite credit card balances being very high, despite consumers having eaten into savings, despite wealth having been destroyed, consumers really still aren't worried about losing their jobs. And so they're still hanging in there. And this is all taking longer to play out. I think they will crack, but I think those cracks are to come in 23, not necessarily right here and now.
Steve Chivarone, you don't remember the zombies, but one Stevenoff does, as I do. Great singles from the 60s as well. Let's talk about Stevenoff and the zombie companies right now. Are the zombie companies going to roll up with this new rate regime?
Well, I think you're certainly going to have a lot of pressure on it, because what we've seen, and I think what the UK has tested and shown, is that the old system of stimulating your way out of any kind of recession or financial market pain isn't being allowed. The inflation is holding you at bay there. And so you're in this scenario where you're going to have a slowdown, you're going to have pressure, you're going to have credit cracks, and the federal government and central banks can't come to the rescue as quickly or as easily as they have had historically. That's why this is, I think, a long, drawn-out, multi-quarter economic downturn, not something that's going to reverse quickly.
I was reading through your notes, Steve, and I pictured a big mattress that was stuffed full of dollar bills, and that was the entirety of it. Is that really what you're doing, or is there sort of a more nuanced approach?
Well, no, it's much more nuanced than that, right? You certainly don't want to put your cash under the mattress. You want invested cash. Now, I'm not endorsing Tom's triple levered cash fund. Let's be clear. But prime money market strategies, you can go out a little bit further on the curve. That 3 to 6 month part of the curve, you want to have liquidity within your cash portfolio. You want to be able to take that money and move it out to longer duration fixed income when the time comes. And we think that time is approaching, though it's not here yet. But you can get pretty darn compelling yields as you go into kind of cash strategies and you go a little bit further out the curve. You're at 3 1/4 on a prime cash strategy, and I think you're going to be over 4 within 2 weeks. That's not a bad place to wait. And then we think you'll be able to deploy that in the not too distant future with some compelling opportunities. But yeah, cash is king right now.
Steve, you talked about going further out along the curve. You said now's not the time. When the time comes, walk me through the process you go through that guides that decision. What do you look at?
Yeah, there's a lot going on. There's a game of chicken going on right now. The biggest risk to the financial markets are rising yields. And what you've seen is that the U-turn, or the initial U-turn in the UK, has had mixed results. And so I think the Fed is trying to hike and crack the economy, get the unemployment up, get the growth down, and then allow bond yields to fall on the back of that as recession overtakes inflation is the key concern. But that hasn't happened yet. What's happening is with each hot inflation report, the terminal rate goes up just as rates do, and the whole thing moves up.
Yep.
Bond yields continue to move higher. That's the dynamic that needs to stop. You need to see inflation stop rising for a minute, at least on the core readings. And what we're concerned about is with services moving up, if you get any move higher in energy prices, a $92 average WTI price in December, and you could very well have a new headline high in inflation in the U.S. And that's, I don't want to be buying long duration in front of that.
Hey, Steve, wonderful to hear from you. Steve Chevron there of Federated. Tom, to Steve's point, it's not just that inflation keeps coming in hot, it's that the output, the economic numbers keep coming in resilient. And this Fed, to Steve's point, you're pricing a higher terminal rate, and the whole curve just shifts. It's not like twos are up and 10-year yields are down. It's just the whole curve up.
Yeah,
higher.
This is a really important distinction of a shift versus the dynamics that are out there. This was discussed a little bit at IMF, and the basic feel was from Stanley Fischer's ultra-accommodative to accommodative to some form of John Williams neutrality. I'm going all our start on you. I'm trying to dazzle you.
Thanks, Dad. I appreciate
that. But are we near restriction? And I didn't hear anybody say we are.
You know that game we play, things you never want to say? This is something you never want to say as a spokesperson for a government. Liz Truss isn't resigning as Prime Minister. I mean, we should do an end of year program just based on headlines of things people should never want to say. That's near the top, Tom. Liz Truss isn't resigning as Prime Minister. When you have to come out and say that as a spokesperson for a government, Tom, it does speak to the moment that the UK's in.
Yeah, it is as well. And, you know, I got to be careful here, but somebody was out measuring the duration of Truss versus the White House duration of our good friend, Mr. Scaramucci. And
I saw that
she's
tweet.
Two Scaramucci's.
Two Scaramucci's.
Two Scaramucci's. Maybe
how did the Chancellor get on? Brutal. Brutal. We'll hear from this Chancellor again.
This, John.
We'll hear from this Chancellor again a little bit later on this morning over the UK, and I'm sure we'll take some of that footage for you. But ultimately, at the end of this month, we'll also hear from him in a detailed way when he announces more UK measures, Tom. That headline crossing too. There is more to come.
So you think there's some substance here at 10:30 this morning, New York time?
I think we need to work out what the more is. And it sounds like spending cuts. And this market hears spending cuts and a reversal of tax policy.
Or actual nominal spending cuts?
We'll see.
Wow.
Coming up, Rob Waldner, Chief Fixed Income Strategist and Invesco. You won. You won.
Yeah, but you don't even mention it. You give equal time to AC Milan.
I said the Liverpool won, and you said Spurs won.
Spurs won.
And you had airtime.
It was a fair penalty kick. Even Kane.
Was it a good penalty?
It was a legit penalty.
Nice. Are we done? Is that enough Spurs time?
That's enough Spurs time.
It's like hand-holding from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. Here in the UK, the newly appointed Chancellor Jeremy Hunt has set out plans to try to bring order to the public finances and reassure markets. That's after Liz Truss's economic programme triggered weeks of market turmoil. He announced a further rollback on some of the tax cuts planned by the Prime Minister and a shortening of planned universal energy support.
It is a deeply held conservative value, a value that I share, that people should keep more of the money they earn. But at a time when markets are rightly demanding commitments to sustainable public finances, it is not right to borrow to fund this tax cut.
Meanwhile, Hunt will address Parliament later with more details. European Union nations have agreed to a new package of sanctions on Iran over human rights violations related to the death of a young Iranian woman who died in police custody after allegedly flouting strict Islamic dress codes. Austria's foreign minister says the package targets 11 Iranian people and 4 entities responsible for serious human rights violations. Ministers are also discussing reports about Iran's military support for Russia in its war against Ukraine. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Leanne Gerrans. This is Bloomberg.
Apple has identified its next big business, bringing advertisements to more parts of your iPhone. Today, Apple pushes ads in 3 places: the App Store, Apple News, and the Stocks app. In the News and Stocks apps, Apple shows display advertisements. That means that third-party companies like car dealerships or mortgage lenders can showcase their advertisements just like they can on a website. On the App Store, the situation is different. There, Apple has search ads. This allows developers to buy their way into showing up higher on search results. For instance, an App Store developer can bid for the term car racing or basketball so their apps will surface above competing apps in the list of results. Apple's push into ads is a little ironic, given that its ATT, or App Tracking Transparency Privacy feature, limits the ability for Meta, Snap, and even smaller developers to generate as much revenue as possible from advertising. That's because the feature allows users to choose if they want their data collected and tracked across third-party apps and websites. Still, Apple's hoping to expand its own ads business and is planning to add search ads to its Maps app. Other areas where ads could eventually appear are in Apple Books and Apple Podcasts, along, maybe one day, with an ad-supported tier of Apple TV Plus to compete with new offerings from Netflix and other streaming video providers. I'm Mark Gurman. This is Power On.
When U.S. inflation numbers are released,
the score is inflation one fed nothing today.
Bloomberg brings you crucial data at terminal speed.
Core CPI in America, 40-year high.
Yields are absolutely flying.
Equities down and down hard.
It's ugly.
And instant expert analysis.
What is the makeup of this inflation?
We are watching the underlying fundamentals.
Will they go 100 basis points?
The downshift just keeps getting pushed out. Now it looks like we're going into extra innings.
Nobody covers the economy like Bloomberg, your global business authority.
I remain extremely confident about the UK's long-term economic prospects as we deliver our mission to go for growth. But growth requires confidence and stability, and the United Kingdom will always pay its way. This government will therefore take whatever tough decisions are necessary to do so.
The Chancellor of the Exchequer, Jeremy Hunt, out of the UK, just in the last hour. You know, we played that game about filing things you never want to have to say. I think you can file that one in that particular category for this Chancellor. The UK will always pay its way. Tom, things you never really want to have to say to the market, and gilts responding, yields lower, yields much lower.
There's a complexity here. We're going to go to Lizzie here, which is going to help out as we went to Guy Johnson earlier. But to me, John, the major parsing here of a given budget for any nation, any time, is when you say budget cuts, are they inflation-adjusted budget cuts, real budget cuts? Are they outright nominal budget cuts, or a combination of the two spread out among different programs? We're going to have a lot of nominal and real discussion here.
We'll get more detail ultimately at the end of this month. The one that sticks out for me, and I keep going back to this, the dimension of all of this that jumps out to me is the support to offset the pain that comes from higher energy prices. And the fact that that's now been cut down from a couple of years just through April 2023. They might revisit it, Tom. They might have to extend it. Maybe for this market, they thought it was too much too soon all at once, and they'll come back in April and see how things look. But this is going to be more than a one winter issue for many people.
Okay, but what's the housing overlay here? Is we're having a housing discussion in America as well as one part of that CPI
The
mix.
pain's coming, without a doubt.
In the United Kingdom.
The Bank of England's still got to put rates up. in early November, on November 3rd, maybe by 75, not for me to say. To your point, Lisa, we thought the Bank of England would do X and the governor often does Y, so I'll save that debate for another day. But yeah, it's getting more expensive, Tom, to service a mortgage, without a doubt.
And I look at the unrest here. I mean, are there protests in the United Kingdom, John, like we see protests in France this morning?
Well, I don't live there, Tom, so I haven't.
No, but come on, you're all wired up. I mean, come on, you're wired up from there to Aberdeen.
Not in the same way you are.
Aberdeen is spelled correctly, unlike the financial
You've got
company.
more subscriptions to British papers than I have.
I do. I read the New Statesman cover to cover.
And what did you learn this week?
I learned that their articles are so damn long they're unreadable.
Like the New Yorker.
Oh no, way longer than that.
Longer than that.
Longer. The new New Yorker. They're like the old New Yorker.
I can't get through the New Yorker.
Yeah, I'm
just
the
too
same
much.
way. I'm the same way.
It's too much.
Should we go to Lizzie?
I think you should do
Lizzie
that.
Burden in
5
London
minutes
right
ago.
now. She is wired into what we're going to see at 10:30, 7:20 Wall Street time. Let's call it 3 hours. Lizzie, what are we going to hear from the Chancellor of the Exchequer?
Well, Tom, you were asking if there are protesters in the UK. I don't know if you can hear the guy over